We still have the long-term structural forces that weigh against significant acceleration in growth.
All eyes really are on what constitutes substantial progress right now.
We're approaching that stall speed for a little while.
The scope for downside surprises in the United States is bigger.
Is that reopening-related pickup in growth, does that translate into a sustained increase in demand and a sustained increase in inflation? And that's what the Fed's watching for as well.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
What a week we've got coming up from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures down 5-6 points on the S&P, off a little more than 0.1%. Tom, this week is loaded.
It's loaded. We got the Fed meeting and all that, and I guess it's a boring meeting. June is more important. Let me get everybody's attention. J.P. Morgan goes, John, from 9.5% to 10% GDP, I believe, Q2, and that's that lifting that's going on. At the margin, everybody's statistics are coming higher.
Take your pick this week, though, Tom. The earnings, Apple,
the earnings
Amazon,
are front center.
The president's address to Congress later this week as well. We have a lot coming up.
Well, we've got $1.2 trillion in revenues off of 4 companies, Amazon, Microsoft, Google, and Apple. I'll let somebody tell me what the schedule is this week, and I'm usually not that big on this, but, John, I must admit the restatement of the profitability of modern American technology is due, and it comes due this week.
Elisa, are you willing to call the Fed meeting this week a snooze fest?
No, I'm not. And I will say, I thought that was quite a way to start, Tom. I got to say, it's not a snooze fest because a lot of people are looking at any indication of the taper debate. A lot of economists now expecting the Fed to announce indications to taper their $120 billion of bond purchases every month starting later this year. That is ahead of what people have thought. The Fed seems to be indicating they're not going to announce this. You're right, Tom. However, John, they may indicate just how much their willingness could be to shift position in terms of tapering.
Setting the stage for June seems to be Operation April, seemingly for many of you out there at the moment. From New York City this morning, here's how we start things this Monday morning. Your price action shaping up as follows on the S&P 500. S&P 500 futures look a little like this, down 6-7 points on the S&P and off a little more than 0.1%. Into the bond market, yields are higher by a couple of basis points. After 3 weeks of gains for Treasuries, yields up 2 basis points to 157.73, and there we are, close to a 121 handle on euro dollar. Lisa Abramowicz, there we are, 120.94, unchanged on the day.
Yeah, the idea here is that the vaccination pace seems to be picking up in Europe, and people do believe, John, to your point earlier, that the upside surprise potential in Europe greatly exceeds that in the United States right now. Right now, I'm looking 8:30 a.m. We get durable goods in the U.S. This will be interesting in terms of capital investment by companies. The expectation is for a slowdown, but people are looking for how many big-ticket items, how much companies are willing to invest ahead of what they see as an accelerating boom in the United States. Then today, 11:30 a.m., we get a $60 billion 2-year sales from the U.S. Treasury Department. At 1 p.m., we get $61 billion of 5-year notes. I am more interested in the 5-year notes than I am the 2-year notes. It seems like that front end is pinned. Longer end, key question is, when does the Fed hike rates? A lot of people seem to be predicting that they're going to hike rates sooner than the Fed themselves seem to be suggesting. And then today, after the market close, we get the kickoff to the big tech earnings that you guys are talking about. Tesla will be looking for deliveries, whether they made good on that, as well as the accelerating orders. I'm sure there will also be discussion of their investment in Bitcoin. And Elon Musk will be hosting Saturday Night Live this week, so perhaps he'll be discussing that as well.
Isn't it May 8th? He's
May 8th,
now. It's May 8th.
May 8th, okay. So,
but still, who knows? I thought Lisa had a great chart today, John Farrell. Copper running away.
Yeah.
She put that out on Twitter, and, the commodities bear watching here. John, I would really want to make clear that it is the surveillance snooze fest. And, of course, we'll be bannering all day in love with Aberdeen's concept of devowelization. The surveillance snooze fest. I mean, I'm sorry, John. John, you're English. Would you explain what in God's name are they doing?
You want me to explain this one?
Yeah.
I've got no idea, Tom. I saw it out on Twitter just like you did, and my first reaction was, what's the date? Then I checked, and it wasn't April 1st, and I still don't think it's serious. I can't believe, but maybe this is the new brand over at Standard Life Aberdeen Investments. Can you imagine what Martin Gilbert is thinking right now, a man who we've all spent a little bit of time with over the years? This was his old baby.
It's his baby, and it's been a train wreck, hemorrhaging at least $10 billion in assets, and I guess this is when stupid stuff happens. Speaking of stupid stuff, John, is Man U for sale? I mean, do we need to get Lord O'Neill on?
First thing Lisa said to me this morning, I think that's the most interesting story of the morning, according to Lisa Abramowicz, and I said, Lisa, according to the Daily Mirror. Look, I think the dominoes started to fall last week when Ed Woodward actually came out and there was the big talk of him stepping down as the chairman of the club, Tom. Next big move is, OK, who's got enough money to buy the club and what do they want for it? Still don't really know what they want for it. That story was a little bit vague. Was that for the stake that the Glazers hold, Lisa, or was that the value of the whole company,
Honestly,
the whole club?
I just think that the idea that U.S. investors are going to be that much less interested in the Premier League because that upside is capped, that basically the fans have spoken and they don't want diminished competition, that's interesting to me, that basically the Glazers didn't get what they wanted and they said, all right, we're out.
You might find that it's another set of Americans that start bidding for the club, Lisa, so I wouldn't be too hasty on that front. There's huge interest in Premier League football still. And we still haven't heard from Barcelona, Real Madrid, what they want to do next. Bear in mind, there are still some clubs still flirting with the idea of pushing this forward. They haven't all stepped out of the league. Real Madrid, Barcelona, I think Juventus in the mix as well. They haven't officially pulled out of this effort yet.
Can we say the Super League is transitory?
We can for the moment, yeah.
What, you want to take a drink? Is that what's going on here?
I think he wanted a drink.
Right.
It's Monday morning.
6:05.
And it's not Tang.
Why not? Let's bring it Dan Arm, BNP Paribas chief US economist and head of Markets 360 North America. Dan, this Wednesday we'll hear from the president. We'll hear from Chairman Powell as well. If you could have a preview of one, what would you pick, the chairman or the president?
No, definitely. I think on the Fed side, this is about as well telegraphed a meeting as we can get. So it should be a pretty sleepy wait and see kind of a meeting. So I think all eyes instead are on the president and how he's going to try and pitch these really ambitious plans on everything from infrastructure to taxes to climate.
Dan, I love your backdrop. You look like you're in the Endeavour space capsule on your way to the space station this morning. Dan, I want to talk to you about the idea of we're ratcheting up GDP expectations. Is GDP catching up with the Zeitgeist, or are we behind and we're going to have to catch up with a boom economy?
No, I think recent forecasts really are catching up. You know, we're calling for near double-digit impact. So double-digit Q2 and then near double-digit Q3. It's going to be a great-looking couple of months. But as we were just saying earlier, the Fed has pretty much said they're going to look past that. And I think markets should understand that as well. The real question is, beyond the summer, after we get this reopening-driven boost, how long is this going to sustain itself?
And there's also a question of the inflationary aspects that we see. Tom was talking about how we're seeing copper surge to the highest level since 2011. We're seeing crop prices in the United States soar to the highest in 2013. How can we call this transitory if this seems to have legs, if people seem to be saying that they could see prices continue to rise and at least not fall substantially from here?
Yeah, I think that's the big question. And definitely prices are going up. We saw really strong March inflation print at 0.3% month on month for core. But is this all price increases that are a bit one-off, driven by not just the reopening, but all the kind of supply chain sort of issues? We are hearing about semiconductor shortages spreading beyond automobiles to all kinds of appliances. Is this going to work itself out, or is this actually going to change what I think to be the key thing here, which is expectations? Are people now going to start expecting more higher prices and then perhaps demanding higher wages to compensate?
The story outside of the labour market to this morning is in the airline situation, Tom. I just want to bring up some of the airlines right now. Deutsche Lufthansa over in Germany leading nicely. AIG, the parent company of British Airways, doing nicely as well. This conversation, Tom, this morning about the EU Commission President Ursula von der Leyen speaking to the New York Times, teeing up US travellers going into Europe. Maybe that travel can happen later this summer.
She's just picking it up from John Farrell. John, you've been out on this, and I know we talk about Singapore, Hong Kong, and other corridors or bubbles, whatever they call it. John, do you think it's feasible? I mean, you're the only one of us three who's actually traveled.
Well, I've got three things to say about this. Matt Miller brought up one of them earlier this morning. Can Ursula von der Leyen actually make this decision for the EU 27? 1, 2, can we actually have a system in place, some kind of vaccine passport certificate system in place that every country understands? And 3, look at the specific words, Lisa, that the EU Commission leader actually used. She was talking about vaccines that were accepted in the EU but also accepted in the United States. Now, reverse engineer that, because as far as I understand, AstraZeneca is not approved in the US. So if you've had an AstraZeneca vaccine and you live in Europe, can you travel to the US if that's going to be the agreement later this summer?
Yeah, is that the issue, or is this just an issue to try to prevent the Chinese vaccinations from being applicable to some of these travel guidelines? And then, of course, there's a question from a health perspective, and we're going to be getting that. Daniel, just to wrap up with you, one question that a lot of people have is how much can the U.S. accelerate without the rest of the world joining the feat here, given the fact that we're seeing the acceleration in India and Brazil, some of the fastest growing economies in the world?
No, I think the acceleration is going to be broader based. Certainly the U.S. is at the vanguard here, both in terms of vaccination kind of driven reopening hopes and in terms of fiscal spending. But one of our key messages has been that Europe is not far behind in terms of vaccination. They're going to go through, they are, I believe, working out their supply chain issues on vaccination distribution. So they're going to see a nice a reopening kick. In fact, in our forecasts starting in 2022, we have Europe growing faster than the U.S. So it's going to be broader based. I think the question is how much, however, is this going to be sustain itself beyond the sharp end of the V-shaped recovery? Are we going to go back to the same kind of decades-long Japanification trends we've seen in advanced economies prior to the pandemic? Or is this really the start of something new?
Dan, it's good to catch up. It's good to see you. Dan Arn there of BNP Paribas. The idea that Europe could be stuck at zero for another cycle, Tom, is not unthinkable. And that's what's crazy about what's happening right now in the global economy. I think that many of the countries that have dropped to zero may well be stuck there. And the ECB, Europe, is one of those regions.
Europe's one of those regions, but it's the bet here, John. It's not so much the bet into Q2, but the complete lack of visibility we have into Q3 or Q4. Lisa mentions India with the challenges there over the weekend. And John, I just think it's such an interesting stew now. And again, it's why I go back to where these earnings this week. I mean, if you talk 10% real GDP, you got to look at these four tech juggernauts. To me, they actually matter this time around.
Couldn't agree more. I think Apple on Wednesday, Amazon on Thursday. So much dispersion in the global economy. Some convergence maybe later this year
Dispersion
in
is
Europe
the right word.
and the United States, Lisa. And that's captured by a 121 handle a little bit earlier in the session on euro dollar.
Yeah, I do wonder, though, especially with what's going on in India and the potential for variants to emerge, how much that could be stymied by that ongoing pandemic.
In the next hour on this conversation, Peter Cheer, Academy Securities Head of Macro Strategy from New York City this morning. Good Monday morning alongside Tom Keene, Lisa Abramowicz. I'm Jonathan Ferro. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. In India, coronavirus infections hit a record high for the fifth day in a row. The government reported more than 352,000 new cases. Overcrowded hospitals are turning away patients because they're running out of oxygen and beds. The US and Europe have pledged to send aid. The European Union is set to allow American tourists to visit this summer if they've been vaccinated. The president of the European Commission, Ursula von der Leyen, tells the New York Times Americans use vaccines approved by the European Medicines Agency. That would allow them to travel to the EU. Details still have to be worked out. The Fed is expected to taper its bond buying program in the fourth quarter. That's according to a Bloomberg survey of economists. The result is a hawkish shift from March, when more economists thought tapering would happen next year. And investors took advantage of Bitcoin's lowest level in 7 weeks to pile back in. The world's largest digital currency is on track for its biggest gain since February the 8th. Bitcoin dropped as low as $47,000 in Asia before rising almost 10%. China's expanding its antitrust crackdown beyond Jack Ma's technology empire. The government is now investigating suspected monopolistic practices at Meituan, the food delivery giant. Beijing has become increasingly concerned over the growing influence of tech companies such as Alibaba and Meituan over every aspect of Chinese life. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here's the price action this Monday morning, shaping up as follows, going into the opening bell about 3 hours away. 3 hours and about 12 minutes. Never too early to check. Equity futures down 4 on the S&P 500, 41.67, down about 0.1%. Had a little look at 121 on Friday. Did it again this morning
as well, yeah.
120.94, unchanged on the day on euro dollar. In the bond market, yields up just a little bit, couple of basis points to 158.26. Go into a Fed on Wednesday, which Tom says maybe you shouldn't pay attention to, but other people will. This coming Wednesday, and Tom Keene will have a special on Fed coverage this coming Wednesday as well. I cannot wait, Tom.
Looking
Talk about promoting your own programming.
Thank you. I'm all over it. It's like, I'm running box
Caroline
office
Hyde's somewhere
Nomadland.
just crying watching this.
Yeah, okay. Why don't we continue here? We'll do that with Martin Schenker, Bloomberg editor-at-large, managing editor for the president's speech this week. Marty, let's tee up the president's speech. And Jeff Stein in the Washington Post has buried in paragraph 42 the fear of the moderates. Let's add on another $200 billion. Let's take $200 billion and add it on to the Affordable Care Act. There's that pile-on effect that you can't, when you're an incumbent and you've got these political pressures, you add things on.
You do. And, Joe Biden's first 100 days has been a remarkable response on COVID. But what is sort of happening is that he keeps adding, going big as the Business Week.
Going big and incremental big.
Incremental big. And, no one's standing back and saying, well, hold on here a second, except for people like Joe Manchin.
They got to get reelected, and there's many Joe Manchins. There's the moderates, Republicans, yes, but particularly moderate Democrats. Will he speak to them this week?
He's going to try Wednesday night and try to explain his philosophy and why he thinks this is the time for America to fix some long-standing issues, and he's going to do it with dollars.
He's talking about uniting the country, Marty. He's not talking about uniting Congress anymore. And what's interesting about uniting the country, with the previous bill, a lot of support across parties, Democrat and Republican. Really closely watched ABC Post poll, which I'm sure you saw over the weekend, Marty. 4 out of 10 Democrats, 2 out of 3 independents favoring a compromise on this bill. How important is that?
It's very important, and that's kind of consistent with polling for the last decade. They want Congress to work together, Republicans and Democrats. And, Joe Biden said that's what he wanted to do when he came into office. But he's going full speed ahead, even without Republicans. And, the polling shows that's not the way Americans want it to go.
And, Tom, I think that's the difference here, the change. In the previous bill, there was a ton of support cross-party. There isn't this time around.
And I go to Reagan and I go to the vision thing, which is infrastructure. Marty and I lived the advent, John, of the highway system across America. And Marty, that goes to vision. That goes to what Eisenhower had, and he had to drag reluctant Republicans into building the interstate highway. Where's the vision right now?
And the vision is what Joe Biden explains as this is a moment in time where America can actually go big, as I said before, on infrastructure, broadband, and a whole host of things that don't normally are considered infrastructure. He wants America to do that now. Interest rates are at historic lows, and he thinks this is the time we can pay for it.
I can't even keep track, Marty, of all of the proposals that are coming out and the proposals for future proposals that we're expecting months down the line out of the Biden administration. But how realistic is any of this, given the fact that the opposition doesn't just come from the Republicans when it comes to tax hikes, but also from key Democrats? I know that Chuck Schumer, for example, as Tom was highlighting last week, really in opposition to some of these tax hikes without a repeal of some of the SALT caps.
Yeah, I mean, the SALT caps are a tremendous hurdle that Joe Biden's team is going to have to get past. There are some rumblings that they may make some concessions in order to make sure that the Democrats in the Senate go along. But as you mentioned, Chuck Schumer is from New York. New York is the center of the financial industry, and a capital gains doubling is something his constituency is certainly not going to be in favor of.
Who's his constituency? He's got a romance about unions. He's got a romance about Scranton, Pennsylvania. It's a romance of another time and place. They're worried about 2022 and indeed 2024. Who's his core constituency? Do we know anymore?
Well, Tom, you make a great point. It's gotten diluted over the years, Certainly, he has been considered one of the champions of Wall Street in the Senate, and whether he can maintain that position in the face of Joe Biden's agenda is something we'll find out.
We'll have to see.
Marty, good to catch up. As always, Marty Schenker there, Bloomberg editor at large. Senator Lindsey Graham on Fox News Sunday, Tom. There is a deal to be done on infrastructure, a deal to be done without a corporate tax hike, because he believes ultimately it pays for itself over time. And that deal to be done in size of about 800 to 900 billion US.
Yeah, this is really important in terms of the politics of the moment. Can we pay for this over time? And, you know, what's the depreciable asset of a lot of this infrastructure? The answer is decades and decades and decades. And if you believe in that, John, you believe you can pay for it all tomorrow.
Well, I agree with that, Tom. But I think the most important point, and we touched on it with Marty about 3-4 minutes ago, is that the unified response of the electorate, of the general public around the previous spending bill is pretty strong. It's not this time around. And if the president moves the goalposts away from unifying Congress to unifying the country, then what does he do now? Move the goalposts back? Because that post-ABC poll indicates something that maybe this administration does not want to hear, which is 4 out of 10 Democrats want a compromise that at the moment they don't seem to be seeking.
Well, it's the dispersion of American politics, and that's all there is to it. And it's a lot closer than people think. I liked one of our guests on Friday talked about Georgia and the carefulness, John. And I think you've got the quote of the morning where you say, I know Ferro says dispersion matters, and there's just no question about that. And, you know, I think it's something that we should.
There we go.
You know, we should try.
Without vows. Do you know how hard that is to do?
It looks like, you know, good morning, Danny Blanchard. It looks like Welsh to me, you know.
It's so difficult to do, Lisa. You take a word, why did they do that?
Oh,
at
I
Aberdeen
love this.
Standard?
They said
Why
that
did they do that? Is it serious?
They said in the press release that it was a sign of their unified approach and the focus of their new management team.
They're
to
getting
really
a lot of press
drive forward. So
you.
I was looking at all of the failed rebranding efforts. Remember when Radio Shack became The Shack and then quickly went back to Radio Shack?
Very good.
This will be that.
Nice. I mean, what is this? Trying to connect with the youth? Isn't that how 65-year-olds text each other?
Yeah, that's because of the
Careful,
fast
watch yourself there.
Or 69-years.
It does not.
68?
Honestly.
Just throwing some numbers at you, Tom. Totally random.
It's just basically, I think, going to be a mockery, especially because they're trying to, like, you know, I'm cool, kids. I'm one of you
Tom
kids.
texts me.
Really?
Yeah, that's how he messages me, without vowels.
Yeah, I do that. I mean, I'm just asking for transitory. You know,
Have a drink, Tom. Enjoy yourself. Tom Keene, Lisa Abramowicz, Jonathan Ferro, counting you down to a really important week ahead. Despite our attitude this morning, it's actually quite serious. The president addressing Congress this coming Wednesday. The chairman of the Federal Reserve in a news conference. Apple and Amazon earnings on deck as well. Did I miss anything? I think I probably did.
Big week.
I think there's a lot more coming up too.
Commodities move is a big
I think
story.
chat of the morning from
Nobody's
Lisa
talking
Copper, and I'm going to touch on it in about
Lumber,
5
copper, corn.
minutes time.
A lot of GDP.
And then we'll catch up with Richard
PMIs.
Haas, the Council on Foreign Relations President. From New York, futures down 4, we're off 0.1%. Euro dollar, 120.95. This is Bloomberg Surveillance. From New York City this morning, good morning. For our audience worldwide, this is Bloomberg Surveillance, and here's the price action. 3 hours away from the opening bell, equity futures down around about 3-4 points on the S&P. Nice move into the close on Friday, a move higher on the session, taking a big bite out of a weekly loss. That weekly loss really small to close out the week. Earnings front and centre, Apple, Amazon later this week, Tesla after the close. Switch up the board and get to the bond market. 2s, 10s, 30s. Lisa went through the supply a little bit earlier this morning. We get that dreaded 7-year. The dreaded 7-year that went okay the last time around. We're going to get it again tomorrow. I'm not going to say it. The dreaded 7-year. 2s, 10s, 30s. Your 10-year yield up a couple of basis points to 158.43 after 3 straight weeks of gains in the Treasury market. Yields lower. Yields a little bit higher this Monday on a 30-year as well by 2 or 3 basis points to 226. Let's finish on this. We've talked a lot about how small caps topped out in the middle of March. We've talked a lot about how 10-year Treasury yields topped out at the end of March. We also discussed copper topping out in the middle to the end of February. We've taken out that February high on copper. That's important. Copper now up by about 25.5% on the year to date, taking out the February high, Tom. And I think what a lot of people glued to that cyclical trade want to see is the others follow. EM, small caps, and the cyclical trade get some traction once again. But you certainly see it in copper, and that's got to be the chart this morning. A 10-year high approaching one, July 2011. the highs we have not seen since then. That's Lisa's chart from this morning, and worth a look, Tom.
Yes, there's a really important chart. We see that in lumber. We see it in corn. Not on all commodities, but certainly in some. Right now, Richard Haass joins, President of the Council on Foreign Relations. My book of the summer last year, and still hugely important, if not more so now, The World, A Brief Introduction. By the hardcover. Hopefully you'll hit the head of the smart mouth adolescent when you say, shut up and read this. It is extremely important. The first 100 pages is truly classic. Highly recommend Haass's The World. Richard Haass, I love what you people have done as you look back at our history and our concert of power in honor of John Williamson and a more collegial Washington consensus. How do we get from Williamson's Washington consensus to a more rigid concert of power?
Well, we can talk about it internationally. This is simply my thinking that current international arrangements are coming up short, Tom. And what we need to think of some ways of working with countries that are ideologically and politically and economically diverse from us, but we still have to work together, whether it's on climate change or regulating cyberspace or dealing with proliferation, you name it, basically the defining challenges of this era. And again, right now, there's a big gap between where we are in every single one of these domains and where we need to be.
I got a monograph in the mail, Richard Haass, the 100 years of the Council on Foreign Relations. I'm going to read it cover to cover. It's actually really, really interesting. In the arch of 100 years of the Council on Foreign Relations is our politics is every 4 years. That's not the case in China. How do we do a concert of power when we've got a 4-year time frame and President Xi has a many, many decade time frame?
Well, fair enough. Each country has its not just its own system, as you say, but we have our own strengths and weaknesses. China's weakness is that it's very hard to challenge orthodoxy when there are mistakes made, such as there was with the one-child policy, such as there's been with environmental policy. It's incredibly hard to correct those mistakes. Right now, China's committed in certain directions. We'll see how it works out, but there's repression at home. Can they be that repressive at home and still introduce new ideas? They're pushing out against the world. And the question is, can they continue to benefit from economic interaction? At the same time, they're alienating much of the world by their more assertive foreign policy. Yes, we've got all our known mistakes, our weaknesses, our political division. And I think there's real questions about whether or how well we can perform over time. But taking a step back, the real question is whether the United States and China can figure out a way to find areas or pockets of cooperation against the backdrop of a competitive relationship that does not actually become conflictual.
Although people are saying that the only way that the United States can truly do this is if it gets some sort of group of allies on board with it in terms of how it counters China. Given your experience and your tenure at the State Department, your knowledge of the key people who are at play here, how is Biden doing with respect to unifying the allies?
Well, it's going to be tough. One is we've hurt ourselves by not getting involved in regional economic arrangements. That's an own goal. That's a major source of potential leverage. But I think in general, the instinct, the default option of this president is to work with allies, Japan, South Korea, India. I think we've hurt ourselves with India by the slowness of our response on vaccines. India is more fundamentally somewhat reluctant to align itself against China. The Europeans, as you know, have kind of gone their own way vis-a-vis China with their own economic and financial arrangements. So the rhetoric has been better in some ways than the reality of forging a common front against China.
Richard, I'm glad that you brought up India because I've been thinking a lot about this. Why hasn't the U.S. gone more aggressively into helping India, given the fact that the pace of vaccinations in the U.S. has slowed and that the supply is pretty significant versus the population? How much has that set back the United States? And what is the push-pull here in terms of why the U.S. hasn't been more aggressive?
Look, I've been railing on against this now for weeks. This administration, quite honestly, has been more America first, sequential, essentially, in its approach to vaccines than it ought to be. It makes no sense in terms of health because of the variants. It makes no health, obviously, as you pointed out, strategically. How do we bring India closer to us if we're not there for them in a crisis? Just yesterday, belatedly, the United States began to move in that direction. But my guess is the administration both legitimately wants to make sure that Americans are vaccinated and perhaps more questionably has been worried about being attacked from the right over not taking care of Americans before it's helping the rest of the world, even though the fundamental point is when we help the rest of the world, we help ourselves.
Ambassador Haas, quietly at the end of your wonderful book, The World, you have a trenchant phrase, war within countries. Boy, does that ring home. Whether it's Chad and the death of their presidency, supposedly on the front lines of their war with Islamist extremists, or the war within America as well. How do we get out of our wars within countries?
Tom, I don't know the answer to that question, but I think the answer to it will decide a lot of history. Take the United States. We, for 75 years, have been the principal architect and in some ways the general contractor of what organization and order have been in the world. But that's assumed that there was a sufficient degree of consensus in the United States that we could do what we're doing in the world. If that consensus is no longer there, if we don't have the bandwidth, the resources, the commonality of purpose to play that role in the world, history is going to move in a very different direction.
And then something that the CFR has provided great leadership on is, of course, the tensions between Armenia and Turkey, and Mr. Biden providing decade-long and multiple president leadership to state, I believe, I don't want to get in trouble here, but state the obvious of 1915. What does President Biden and the Secretary of State signal with this historic decision?
Two things. One is that this administration has placed human rights type considerations really high on the agenda, particularly compared to its predecessor. Second of all, it's a real sign just how far relations with Turkey have deteriorated.
Yes.
And over decades, we were reluctant to take this step. I was involved in these conversations myself at the State Department and elsewhere. And what essentially now is people are saying this relationship isn't that valuable with Erdogan. As a result, there's not a lot of downside, because guess what? We've already got the downside.
Richard, just to sort of sum up this Around the World in 80 Days with Richard Haas, there is a question of which hotspot is the one we should be paying attention to the most right now. Originally, it was China, the U.S., and the Biden administration was going to be the key test. That seems to have faded a bit. Is that wrong, or is it sort of the focus moved onward to another spot?
Look, if you'd asked me that last week, I probably would have said something with Russia and Ukraine. That seems to have calmed. I still think China and the U.S., though, is strategically the biggest hotspot. There's any number of other places which could be problematic, but the single biggest fault line in the world is the United States and China, and possibly over Taiwan. And the real question is, can these two countries, the U.S. and China, continue to finesse the disagreement that they have successfully managed for 40 years, but China seems to be getting impatient? And can we continue to prevent this from becoming a front-page crisis? I don't know the answer to that.
One of the issues of the moment in foreign policy, maybe the issue. Richard Haas, it's good to catch up. As always, it's good to hear from you. Council on Foreign Relations President. The latest news out of Germany. Just want to bring you some headlines quickly. Germany raising the 2021 economic growth forecast. Here's the number, though. 3.5%. From 3%. If you go to the Bloomberg terminal to the ECFC screen and have a look at where US growth is seen by economists this year, median forecast 6.3. 6.3 against 3.5. And it underlines a couple of things. That it's not just the vaccination rollout, the vaccine rollout in America versus Europe. It's also the fiscal impulse of the US versus Germany and a very different relief approach in the last 12 months.
Well, we saw that last week, I think, in the ECB tension. I mean, John, you're more up to speed than I am on this, but, you know, the idea of the entrenched cultural polarity and what do you do with fiscal across a monetary landscape?
Yeah, well, I would say
it's tangible.
The difference between the ECB and the Federal Reserve right now, what's the question for the Fed? How quickly will you have to raise interest rates? What's the question for the ECB? It's the question that we've been asking for the last 10 years. Will you ever raise interest rates at all? A single move of 25 basis points, 50 through the whole cycle. To compare and contrast where we are now from where we are 12 months ago, here's a nice way of doing it. Airlines, Tom. Airline traffic in America. 1,233% higher year on year. And just to bring you some of the numbers from where we are now to where we were 12 months ago this week to April 22nd, 1.51 million passengers for the week ending April 22nd compared to 111,627 the same weekday a year earlier. Just absolutely unbelievable. That was a single day, that traffic, Tom. 1.51 million.
Hawaii booming. Let me ask this. Lisa, help me here. If I want to go to Venice this summer, take afterthought to Venice, do I really want to risk that? I mean, they're begging me to go to Venice because I'm vaccinated, right?
They are. The key issue is if you actually look up the vaccination schedule, because this may or may not have come up in my circle, the cases in Venice, the cases in Greece are going up.
Yes.
Do you really want to risk that?
John?
And then what's going to be open in terms of restaurants and in terms of are people going to be masked up?
Let's go down to our real experience, John. Should I take afterthought to Capri?
Are you fully vaccinated?
I'm vaccinated.
Okay, and what have they told you about traveling in this country if you're fully vaccinated?
You can, but should you
They've
go to
told
Europe?
you can. Let's see what they say about Europe. I'm not going to offer the advice. I'm just saying if it's logical to travel here, it might be logical to travel somewhere else.
Perhaps.
Yeah, I mean...
We'll see what the experts got to say up next.
I mean, Lisa's got
the Gigi Gronville
of
of Johns Hopkins.
Well done.
That conversation just around the corner. This is an interesting morning, isn't it? Equity futures down about a 10.
It is.
Yields up 3 basis points, 158.79. This is
Euro's
Bloomberg.
Way to sell it.
With the First Word News, I'm Ritika Gupta. It's gone from bad to worse in India, where there have been 1 million cases of the coronavirus in the last 3 days. The US has pledged to send India raw materials and step up financing aid for vaccine production. Prime Minister Narendra Modi implored Indians to get vaccinated and disregard rumors about dangerous side effects. In the UK, Prime Minister Boris Johnson is fighting to get his government back on track. He's dealing with claims about his conduct during the pandemic and battles over lobbying and cronyism. According to the Daily Mail, Johnson said last year he would rather see bodies pile high in their thousands than order a third lockdown. Johnson's office denied he made the comment. Republicans may be willing to back as much as $900 billion in infrastructure spending. That would still be less than half of President Biden's proposal. Republican Senator Lindsey Graham floated the proposal on Fox News. Graham also suggested that deficit spending could be a way to avoid tax hikes linked to the spending bill. And Nestlé's confirmed it's holding talks to acquire vitamin maker Bountiful. In January, Bloomberg reported that KKR had been planning an IPO valuing Bountiful at more than $6 billion. A sale to Nestlé could preempt the IPO. And at the Academy Awards, Chloe Zhao has become the first woman of color to win the Oscar for Best Director. Zhao won for the film Nomadland. The Disney Searchlight Studios movie also won the award for Best Picture. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's a terrible situation that's going on in India and other low and middle income countries. And there is more we can do. And I believe you will see shortly that all these things that we're talking about are on the table, and we will be moving towards that.
Dr. Fauci there speaking to ABC, a tragedy in India. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here's the price action this morning, shaping up as follows on the S&P 500. Futures down 6 and negative a little more than 0.1%. Yields are higher going into that Fed meeting decision news conference with Chairman Powell this coming Wednesday. 158.43 on 10s and up about 2 or 3 basis points. Euro dollar, sneak peek of 121 on Friday again this morning, 120.95 and unchanged on the session. Yeah. Copper flying, crude lower, crude down by about 1.61%, Tom, $61 and about 14 cents.
Very good. What we try to do here at Surveillance is bring you definitive authorities on whatever the topic is at hand. We can do that with Gigi Gronville at Johns Hopkins, out of biology at Indiana University, out of chemistry at Memorial Sloan Kettering in New York, and holding court on security and immunology at the Johns Hopkins University. Gigi, thank you so much for joining us. You have done tours of duty in Delhi. You've done tours of duty in India. Take us away from the sanitized media shots to the reality of the horror we're seeing in India.
Yes, I mean, it's really hard to describe and imagine, but, you know, India has a lot more capability than I think a lot of people realize. And the fact that that their hospitals are so overwhelmed speaks to just how many cases they have and how much of a humanitarian crisis this is turning out to be.
Tell us about the roads out of Delhi, the roads out of Mumbai. Certainly in my reading, it is an urban and rural disaster. Outside of the big cities, what does India look like in a horrific pandemic?
So it's a lot. There's a lot of rural spots in India, and it's and the cities are crowded, more crowded than well, I mean, in New York you're used to, but most people in the U.S. are not. And with every kind of traffic conveyance that for elephants, donkeys, motorcycles, it's a busy spot. So I think there's a lot of and the air quality is probably not helping people at all either, because that's always been a problem in rural and in the city areas. So yeah, it's not good. And so it's really fantastic that the U.S. is offering to help. Hopefully that'll get other countries to contribute some humanitarian aid as well.
The difference in the conversation that we're having around India and the rest of the world, including US and Europe this morning, could not be starker. We're talking about a humanitarian crisis in India, and we're talking about what travel might look like for people who want to go on vacation later this summer between Europe and the United States. Doctor, forgive me for having that conversation with you now. To follow on from this one, what on earth does travel look like this summer?
I think if you're vaccinated, I think that you can be very confident that that you are protected. But it's best to not try to not take your vaccine out for a spin. I mean, it would be really great to not have to use it to get infected. And so I think if you can manage to avoid the kind of crowds and exposures to people who may be infected, that would be the best idea. I think it's going to be different for every family for what they do, but get vaccinated first and allow yourself time to build up immunity.
Doctor, this interview with the New York Times for the European Commission President Ursula von der Leyen got my attention for one reason. It was this line here, because one thing is clear: all 27 member states will accept unconditionally all those who are vaccinated with vaccines that are approved by the EMA. Doctor, there are certain vaccines that have been approved and certain vaccines that have not been approved. And I just wonder, are we going to have some kind of hierarchy of vaccines pretty much well established in the next couple of months?
Yes, that's inevitable when you have multiple products. But I think, for U.S. citizens, I think or U.S. people who are getting vaccinated in the U.S., it's going to be less of an issue internationally, because the two vaccines that most people are getting, and now with the Johnson & Johnson, they will be acceptable.
Dr. Granville, forgive me for being a bit Dr. Doom here, but is this an epidemiological nightmare setting up, that we have a certain level of vaccinations that's good, but not great, not critical mass around the world, and people are starting to travel internationally at a time when you've got pockets of just burgeoning virus, basically asking for mutations, for more variants, and possibly even vaccine-resistant strains? I mean, how much of an issue does this become as we enter the traveling season?
Well, I mean, given how bad things have been over the last year, I'm not convinced that a lot of people had stopped traveling or stopped doing the things that they were supposed to be doing. So I guess I'm like, I've been my optimism is rooted in the fact that I think people have not been following all the things that people have been telling them to do anyway. But I mean, there's nothing magical about any of these variants. You need to, we know how to stop getting infected. You need to have a mask. You need to have good air quality. Try and do social distancing. That is all. The vaccines are an additional wonderful tool that will protect you. But we just, we need to keep with all of the messages. And travel is, I think it's something people have been doing, and hopefully people can do it safely, and we can have more engineered controls so that air quality can be better and reduce transmission.
That said, do you think that there should be certain travel bans in place, or that it's advisable for certain countries to say, well, travelers from India and Brazil are no-goes for right now, or things like that?
I think vaccination campaigns should be ramped up even more than they are now. But because you're right, every time somebody is infected, it's an opportunity for a variant to emerge. And thankfully, all of the variants are covered right now by the vaccination. So we just need to keep boosting that up and borrow some trouble later when we might have to have a booster shot.
Doctor, thank you. It's good to catch up. Come back soon. Dr. Gigi Granville there, Johns Hopkins Center for the Health Security Senior Scholar. The numbers out of the United States right now, vaccinations, keep an eye on this. Your average is now dropping down to 2.75 million doses per day in the last week. That is your daily average, Tom, 2.75 million doses a day.
And I'm sorry, I'm going to look at that as good news. I know it's not 3 million or, I get the idea that it's rolling over. But, John, it's rolling over out of success of the system. I saw 2 glide paths this week, a first shot, second shot, not as good, obviously. But those glide paths are moving in the right direction, and we're getting there.
Overwhelmed by supply, Tom. That was an objective. That was a goal. I'm with you. But there is some data from the CDC suggesting that people aren't turning up for their second shots.
8%.
8%. And it was not that at the beginning of this rollout. And I think that's largely in line with the age. Think about the rollout. It was all age dependent. Risk factor dependent at the beginning too.
Well,
But the correlation's pretty clear. I think the younger people they go for the first dose and maybe they don't feel like they need the second one.
There was reporting this weekend that the youngers are getting sicker and more sick, I think, particularly in the state of Michigan. And, John, I think that's something that needs to be educated and conveyed in the coming days, is the level of sickness of young people who look impervious.
Yeah. Bit of hesitancy showing up in the data, Lisa.
Yeah, and this is a concern, especially as we try to get to herd immunity, as we try to get to a time where we don't have to wear masks.
Coming up, Peter Cheer, Academy Securities Head of Macro Strategy from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, Jonathan Ferro. Equities down 4 on the S&P and off by about 1/10%. Yields in 2 basis points, up rather 2 or 3 basis points to 158.43. From New York City with a big week ahead, this is Bloomberg Surveillance.
We still have the long-term structural forces that weigh against significant acceleration in growth.
All eyes really are on what constitutes substantial progress right now.
We're approaching that stall speed for a little while.
The scope for downside surprises in the United States is bigger.
Is that reopening related pickup in growth? Does that translate into a sustained increase in demand and a sustained increase in inflation? And that's what the Fed's watching for as well.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Chairman Powell, President Biden, and a ton of earnings in between. From New York City for our audience worldwide, good morning, good morning. What a week ahead on Bloomberg Surveillance, live on TV and radio, alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures are nudged lower by 5 points on the S&P 500. Yields going higher by a couple of basis points. Tom, the chairman this Wednesday, the president in front of Congress.
Yeah, it's going to be an interesting week, and the chairman, maybe he'll give us a surprise where we think it's a snooze fest. But, John, to me, what's so important here is what has not moved, and you see that Peter Cheer to come up with us, and we'll talk about the real yield, which really hasn't moved as much. Of course, this off the Aberdeen uproar where they've changed their name and taken the vowels out. We're doing that in spirit this morning, John. But the real yield, John, at a negative 0.76, the key story is it hasn't moved.
The two stories conflated there, Tom, so let's do both. Yields are higher. I'm with you on the real yield side of things. Peter Cheer expecting a persistent higher inflation read over the next year. Look out for that conversation in a couple of minutes. Then Standard Life Aberdeen with this press release. Standard Life Aberdeen, the company, today announces its intention to change its name to Aberdeen PLC, except to spell ABRDN. The new name, pronounced Aberdeen, helpful, will be of a modern, agile, digitally enabled brand that will also be used for all the company's client-facing businesses globally. Tom, we touched on this in a previous hour. Martin Gilbert, a man who's been a good friend of Bloomberg over the years, and we've had several conversations with him, of course. The former chairman of this company, this was his baby, Tom. Imagine what he thinks of ABRDN PLC.
I mean, what would Martin Gilbert say? I mean, that's all there is to it.
Let's get him on the show and find out.
You know, Primerica, and there's been other train wrecks through the years. But, John, I'll be honest, when I first saw it, I thought it was a joke. And to me, it's frankly, it's trophy taking.
Elisa, it was 3:50 when I woke up, and I thought it was April Fool's.
Well, the press release doesn't help the matter. I mean, just to give a sense of how they explained why they did this. It's part of a modern, agile, digitally enabled brand. Basically, this idea, and you talked about this, John, but that phrase in particular, that they're trying trying to face themselves toward the digital future. And as we head toward tech earnings throughout this week, how do these companies make themselves into tech companies? They just take away the vowels.
There's no vowels in a digital future, apparently. This feels very 2002 or something like that, doesn't it?
Go further back.
For those of you on radio right now, we're putting out on TV banners of all this, like, what would Martin Gilbert say without the videos? And come on, our crack. I just got a report in from our head of marketing, Young Buchanan. He's Australian. What the hell's that about? But come on, John, I just think it works.
It works. Do you like it? Okay.
KN, FRR, and brr.
Nice. Fur and Bruce.
We've beaten this to death.
I can't get it done.
All
Can I
right.
do the markets?
Please.
Thank you.
The
futures down 5 on the S&P 500 this morning. It's a marginal move lower to 41.66 and down a little more than 0.1%. Talked about yields being higher. They are by 3 basis points to 158.79. We had a look at 121 on euro dollar again this morning.
Yes.
Pulled back just a little bit at 129.92. Lisa on top of the copper story through this morning. Crude lower though. Crude lower by about 1.5% to $61, Lisa, and about 24 cents.
And there was a really interesting story on the Bloomberg terminal by our columnist, of course, looking at how India's horrible crisis with respect to COVID is actually lowering global oil demand expectations. It's something to watch going ahead. Another thing I'm watching, durable goods orders. They're coming at 8:30 a.m., kicking off a really busy week of economic data. We didn't even mention that. We're getting PMIs on Friday. We're also going to be getting income information. Interesting to see whether people's income is going up in tandem with these increase in prices that we see across the board. Also today, we've got a slate of auctions, $60 billion of 2-year notes from the U.S. Treasury Department, $61 billion of 5-year notes. I am more interested in that. How well is that bid, given the fact that people do expect, like Peter Scheer, who's coming up, inflation to pick up later this year. And of course, after the bell, Tesla to report first quarter earnings, look to deliveries, look to their discussion on Bitcoin, which happens to also be up, rebounding a little bit after last week's sell-off. This idea of Tesla being on the digital forefront in addition to actually having more deliveries, particularly in China. But how much do they have to discount each car, John, in order to get those deliveries, in order to get those orders over in China?
Then it's Apple. And then it's Amazon. Earnings piling up through the week. You talked about the issuance, the supply, Lisa. We touched on this earlier too. 7-year debt deal from the Treasury tomorrow. $62 billion worth coming up at 1 p.m. Eastern tomorrow. Anyone who closely follows the Treasury market knows that there was a bit of a hiccup a couple of months ago around that 7-year issue. Let's turn now to Peter Scheer, Academy Securities Head of Macro Strategy. Pete, good to catch up with you, sir. You met with the team in San Diego in person. You got on a plane. You went and saw the team over at Academy. How did it feel, Pete? How do you feel, sir?
It's been great. This is my second business trip. Went 2 weeks ago to see clients in Dallas and Austin. So I think people are going to get back out on the road. Zoom is great, but it's really nice to meet people face to face. So I'm excited. I think we're going to see that normalization and have a great summer.
Domestic leisure travel has exploded, Pete. That's not going to be news later this summer. What will be news is if people get back on a plane and do what you did on the business side. Do you think we can get back to normal a lot quicker than maybe some people expect?
I do. I think there's going to be an ongoing slowdown of kind of internal travel. So, to go see your San Diego office like I did, I think that won't be the norm. But I do think people are going to get back on the road to see their clients, right? One person's going to close a deal because they went somewhere in person and met with people. And all of a sudden people are going to realize, shoot, we've got to do that. We've got to retain those relationships, rebuild those relationships. So I think there's going to be a surprise to the business travel.
Peter, we're starting to see mergers. We're seeing big mergers and maybe the strategic battle of Canadian Pacific and Canadian National. Moments ago, we see a small merger of New York Community and Flagstar Bancorp of Troy, Michigan, 5,000 employees top to bottom. Is that the surprise out of the pandemic as a national roll-up to a new efficiency?
I hadn't thought of it quite that way, but it does make sense. We're expecting high M&A activity. We've seen stocks stabilize. So there's, that concern about, I'm overpaying. I think some of that gets alleviated. And while yields have risen, they are still very, very low, and real yields are still negative. So you're heavily incentivized to lever up to acquire companies if you think there's a good strategic fit.
And what do you feel is on use of cash? I mean, I get the idea that there is going to be CapEx, but what I see so far is just a re-emphasized share buyback model. Is that what we're going to hear this week from big technology?
Yeah, I think we're going to see continued and ongoing share buybacks. A lot of companies raised even more debt than they necessarily needed last year. They extended. Then you've had really good profit growth. So I think they're sitting on a lot of cash. and use of proceeds to buy back shares continues to make sense, especially as increasing uncertainty of what the tax regime will look like going forward. You may as well take that cash, buy back your shares, and that'll give you more flexibility to deal with however tax outlook comes in a year or 2 years.
Peter, what are people misunderstanding about inflation right now?
I think they're missing a couple things. I think we're actually starting to see wage inflation. So, lumber prices, things like that are skyrocketing, but this inability to hire low-wage workers is starting. And as we start building out a very light manufacturing base, I think it's going to be harder and harder to hire kind of low-type middle managers. That's coming. And in my view, ESG itself and the sustainability is inflationary. So designing sustainable products, designing and manufacturing in a sustainable way will be inflationary. And I think a lot of that will get pushed onto the consumer. And I think that's what we're missing. We have to stop focusing on this reopening kind of inflation and think, what's this economy look like 6 months, a year down the road? And that's where I think you're going to see this real inflation, and it's going to be more persistent than people are currently pricing in.
All right, so where in the markets is it most mispriced? In other words, which aspect of the markets could get most surprised by the inflation that you talk about?
I think we're going to see it in the yields. I think we are going to see a relatively fast move to 2% on the 10-year. And I think that's going to impact some of those huge growth stories, the companies that have really relied on very cheap financing and, a low discount rate when looking at their future cash flows. And those are often the same companies that I think are at most risk from changes in the tax code. So I think it's going to be that high flyer. Smaller tech might be under a little bit of pressure. But as a whole, because we're getting this economic growth, it's not going to be a massive weight out on markets.
Well, Pete, what I want to know then is not the call on 10s, it's the call on 2s. Do you think it changes anyone's view on when the Fed makes a move?
For me, no. I think this Fed really doesn't believe in the Phillips curve anymore. I think they want 3% unemployment. And part of that is they really do have now a belief that inequality, job inequality, things like that are very, very important to focus on. And the one way to drive minority unemployment down is to drive overall unemployment down, especially when, as the Fed, your monetary policy tools are quite blunt. Yep. So I think they're going to remain on hold and push this harder than we ever thought possible.
Pete, it's got to catch up. As always, Peter Cheer, Academy Securities Head of Macro Strategy, meeting the team over in San Diego, California. And Tom, you've got to say, business travel. I agree with Pete. If you can get a deal done, you're going to get on a plane and close. And in a nod to Glenn Ross, travel is for closers. And I think that's going to be the story in the next 12 months. Do you like that? I won't say the next line in that Alec Baldwin speech, because the next line gets a little bit messy for live TV and radio.
Radio, it's not appropriate. But, John, what I would say is it's been predicted for years that face-to-face would end, and it just doesn't. Well, thing, it just doesn't end.
Although, did you see the story about how big European banks, John, are ending about half of their business travel? They expect that the actual business travel will not come back more than 50% of 2019 levels. I mean, there is material change.
Difference between internal business travel and client business travel, though. Okay. Now, going to meet your colleagues on the other side of the world, I think a lot of that might get pulled back. But meeting clients, I think, is going to be as important as ever. If you can close that deal by meeting a client and getting on the plane, you will.
What was the next line after that one?
I don't think you want the next line. What is it? Let me tell you something. Put that coffee down. What is it? Coffee's for closers. And then the next line is, you think I'm... You get it? Anyway, okay. Tom Keene, Lisa Abramowicz, Jonathan Ferro. I'm staying out of trouble. Coming up at 8 a.m., Troy Gajewski, Skybridge co-CIO and senior portfolio manager. Troy on Bitcoin, who made some headlines when he joined us last month. Tom, you were away on a long vacation. He was with Lisa and I. And he talked about taking his portfolio with Bitcoin, 13% of it the last time we spoke to Troy Gajewski. It's going to be very interesting to see if that position has got bigger, how he's responded to the action of the last couple of weeks as well. 41.68 on futures, coming in 1/10%.
Talk about the value-added hedge funds. They've been doing better recently because they're loaded in big technology.
Yields up 4 basis points to 159.49. Euro dollar 120.91 and unchanged. Tom talking up big tech. Big tech reporting. Can we call Tesla big tech? After the bell, they report anyway, a little bit later today. And then on Wednesday, I believe it's Apple. On Thursday, it is Amazon. From New York this morning, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. In India, coronavirus infections hit a record high for the 5th day in a row. The government reported more than 352,000 new cases. Overcrowded hospitals are turning away patients because they're running out of oxygen and beds. The US and Europe have pledged to send aid. And the European Union is set to allow American tourists to visit this summer if they've been vaccinated. The president of the European Commissioner, Ursula von der Leyen, tells the New York Times Americans must use vaccines approved by the European Medicines Agency. That would allow them to travel to the EU. Details still have to be worked out. In Russia, prosecutors have issued a preliminary order suspending the operations of opposition leader Alexei Navalny's campaign offices. They say Navalny groups are extremists. Navalny is in prison and last week ended a 24-day hunger strike. A quarantine-free air travel bubble between Hong Kong and Singapore is now set to begin May the 26th. The two sides have been in talks for months. Hong Kong says people must have had 2 vaccine doses at least 14 days before flying. Singapore has no such requirement. And investors took advantage of Bitcoin's lowest level in 7 weeks to pile back in. The world's largest digital currency is on track for its biggest gain since February the 8th. Bitcoin dropped as low as $47,000 in Asia before rising almost 10%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
How successful is not in the hands of the administration. It's also in the hands of Congress. And this is really tricky for the administration right now. So, a lot of people, for example, don't expect the capital gains tax to double. They think by the time you finish the congressional process, it will be less than that. So the administration will not get all it wants, but there is a clear change in emphasis going on.
Really great to catch up with Mohammed El-Arian, Bloomberg opinion columnist and Queen's College president from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here's the Monday morning price action. Equities coming in 3 points on the S&P. No drama, down almost 1/10%. 120.90 on euro dollar, off by not even 1/10. In the bond market, yields are higher by 4 basis points now almost. A lift. We reapproach 160 to 159.49, and crude down 1.5% to $61.22. We look down to Washington, D.C. a little bit later this week with Chairman Powell on deck and a news conference with the Federal Reserve Chair following a decision in Washington. And then it is the president in front of Congress. And Tom, as always, you start quickly and then things start to slow.
Yeah.
They start to go slower.
Well, we're going to have to see what it means in terms of the number of days. 100 days for any presidency out of 1,460 days is 7%. Make it sharper, 6.8% is 100 days. And the focus, of course, is always on those first 100 days. Emily Wilkins joins. She is expert on the second 100 days. Emily, Axios leads with that today. What about the second 100 days? What do you expect?
It's going to be much tougher than the first 100. I mean, President Biden came in, knocked out a bunch of executive orders that people in his party were widely supportive on, used the executive authority to do what he could. Now he passed that $1.9 trillion COVID bill. But this next one, you talk to Democrats, you talk to Republican experts, everyone says this one is going to be much harder. And we've already seen that with Senator Joe Manchin, more moderate Democrats in the House who are already starting to come out against different parts of this infrastructure proposal, and now Biden's going to try and sell the next bit of it this week.
I know Lisa and John want to spin forward. Let me spin back a little more. How much has President Biden in the first 100 days de-Trumped the last 4 years?
I mean, he's done sort of the basic stuff, the stuff that he can just swipe with his pen and boom, he's got an executive order that overturns this or undoes that. Yeah, he's been able to do a lot. But look, it's the harder stuff. It's the legislative stuff that's really the long-lasting stuff here in D.C. And that's the one that just takes more effort to do because in part you need Congress, you need other agencies, you need larger numbers of people to be involved and on board with what you're doing. So So there are still plenty of parts of Washington, D.C. right now that are being shaped by the policies of the Trump administration. And you're going to sort of see, particularly with taxes, a bigger push from the Biden administration to undo some of those items.
Emily, this is going to be tough. The president on the campaign trail said he would unite Washington. Then when he got to Washington, he said it wasn't about uniting Congress, it's about uniting the country. Well, the country is telling this administration that they want to compromise on infrastructure. According to one poll, and I only know it's one poll, I know that, ABC Post out with this poll. So here are the numbers. 4 out of 10 Democrats, 2 out of 3 independents favor a compromise on this. So where are the goalposts this time around for this administration?
Well, what you're seeing right now is Republicans coming forward and saying, look, we think that maybe we can do a $600 billion infrastructure package. Lindsey Graham this weekend said he thinks they can do a $900 billion infrastructure package. And Joe Manchin is saying, yeah, let's see if we can get something like that done. So the big question in D.C. right now is how does this all work together? Do Democrats wind up going with Republicans to get something bipartisan on roads and bridges and then sort of do the social, child care, health care component on their own and taxes on their own? Does this all get put into one big bill? Everyone's trying to feel this out right now. Exactly how interested is the White House in working with Republicans? And then how possible is something like this to pass in Congress? Because remember, you go too far towards what moderate Democrats want, you risk isolating and alienating those progressive Democrats who might at some point dig in their heels and say, you know what, if you can't give us X, Y, and Z priorities, we can't support this anymore.
Do Democrats alone have enough support for the tax hikes that President Biden is talking about?
I mean, at this point, with what Biden has put forward, we've already seen Joe Manchin come out against that 28% corporate tax rate, saying he thinks they might need something a little bit lower. We've seen Democrats in the House say that they need to remove that cap on state and local taxes. So look, Biden's proposal, it's the first proposal that comes out. From there, it's going to go to Congress. And once Congress gets their hands on it, things are going to be added, things are going to be cut, things are going to be changed and negotiated to make sure they get it through. Obviously, what the president puts forward is really important, but we're going to have to be keeping our eye over the next several months, really, to see what Congress winds up doing with this proposal.
What is the power of Senator Schumer on the SALT debate? I mean, does he just have a tantrum and say we're not doing this unless we get rid of it?
I mean, he can have the tantrum all he wants, but he has to make sure that all of his Democrats in the Senate come along with him on that. And Tom, you're absolutely right here. I mean, Senator Schumer is from New York. Where's the big push coming to get rid of this SALT cap? It's in New York. So Senator Schumer absolutely wants this. I am positive that he is communicating that to a number of people, trying to find a way to remove these caps. And the White House has said, look, we're not opposed to removing this caps, but you need to find a way to pay for it. Because right now it's a source of revenue for the federal government that's going to be much needed to get some of these other policies passed.
Emily, it's good to catch up. It's good to see you.
Yeah,
Emily
we gotta
Wilkins,
go buy some Bitcoin.
down in D.C., Bloomberg government reporter. We've got to take a look at Bitcoin. It's up by more than 11% this morning. A number of years ago, the CEO, chairman of JP Morgan Chase, Jamie Dimon, referred to Bitcoin as a fraud. Then later on, several years later, talked about his regret of calling it that. Called it not his cup of tea. And now, Tom, according to some reports, and we haven't confirmed that here, but coming from CoinDesk, JP Morgan to offer an actively managed Bitcoin fund. That headline, just crossing the Bloomberg, it comes from CoinDesk.
I'm fascinated by the word actively. I mean, I get owning Bitcoin, and there's easy ways to do it through Coinbase and the rest of it, you know, but how do you actively manage Bitcoin?
A single Bitcoin. Tom Keene, I'm not sure. I'm not sure if you're only exposed to Bitcoin, how is it actively managed? Is that what you're alluding to?
It's up a lot today. I mean, you know, I considered stepping in Sunday morning.
Did you? Lisa, a serious response maybe to that headline?
Look, all the banks are getting into it, and I think that we looked at how much honestly, when you have the likes of Coin, as it listed on the NASDAQ, doing so well, and you look at their margins when it comes to what they earn from trading this, banks can't not get into this. I mean, it's just too juicy. And especially as you get established players, PayPal and the likes, accepting Bitcoin or trying to harbor it, how do these banks justify to their shareholders that they're not in it, John?
Bottom line, if the clients want it, the clients get it. And the clients want it, and Tom, they want exposure to it. And when we catch up with Troy in, 30 minutes' time, Troy Gayeski of Skybridge, there's a man who wanted access and exposure to Bitcoin, and he got it.
I'm speechless. I just
Clearly.
really, John,
Evidently. I'm shocked.
I'm trying here. I mean, Gajewski on Bitcoin. I mean,
Yeah, Lisa, that is most certainly transitory.
Yeah.
Tom Keene, speechless. You take a second, Tom. You have another drink. You enjoy yourself. You kick back. You look relaxed. Coming up, David Page, AXA Investment Managers, Head of Macroeconomics.
I got a buy limit order at 65,000. I'm not buying a bit dog.
David Page of AXA and maybe our surveillance co-host for the next hour.
Bitcoin has vowels.
From New York City, live on TV and radio for our audience worldwide, here's the price action this Monday morning. Equity futures negative, about 0.1% on the S&P 500. No real drama here on the Nasdaq. We come in about 1/3%. Big week for big tech. Tesla after the close. Wednesday, Apple. Thursday, Amazon. Switch up the board. Speaking of Wednesday, Chairman Powell of the Federal Reserve in a news conference. Then on Wednesday also, the president addressing Congress. Here's what's interesting for me in the bond market. Everybody in fixed income, the economists on Wall Street, all believe that the Fed, the ECB, make a move when they put out the forecast. But this is a central bank now de-emphasizing forecasts. So why wait for the forecast if you're no longer dependent on the forecast? Just something to think about. I'm not saying anything happens this Wednesday.
I got confused.
Just consider it. Yields are higher by 3 basis points on a 10-year to 159.14. On a 30-year, up 3 basis points to 226. Treasury's a bit softer after a third week of gains. Let's finish on this one. Euro dollar, switch up the board. 121 handle on euro dollar.
Yeah.
Friday session, again this morning briefly. 120.92.
John, I think
highs of the year, Tom, 123.
No, you got to stop it there, John.
I'm going to stop. I'm going to get there. I'm going to give you some space.
Okay.
Take a breather. Have a sip.
Okay,
Euro
thank
dollar
you.
on the
It's
session.
transitory.
Unchanged at 120.92. Go on.
Okay, there it was. John, look, I went back and looked, and I think these bouts up to 123 on euro are really, really, really important. Does the European community have the economic strength to withstand what clearly causes angst at a 123? I do not think this is a small matter.
I think this is going to be very different to a Federal Reserve
Yes.
that a month ago confronted high yields by saying this is consistent with a better outlook. I think the ECB is going to be reluctant to embrace the same thing in both the bond market
I just had to
and
bring
in the
that
FX
up.
market too. Tom, I agree with you. Euro dollar just short of 121 at 120.91. Let's get you some movers. Busy week with Romain Bostic.
Yeah, it's going to be a busy week for earnings, of course. About 1/3 of the S&P 500 going to be reporting this week. Of course, Tesla, that's going to be the big one today after the bell. We, of course, already know what those Q1 delivery numbers were, 185. That's basically based off, of course, those monthly updates. But what the street really wants to see is where the company is going to go for the full year. The company has already hinted at about 750,000 deliveries for the full year. However, when you look at analyst estimates, they're actually tracking more above 800,000. So it'll be interesting to see how that gets reconciled when we get those results and the conference call a little bit later tonight. The company is expected to be, once again, GAAP earnings positive for once again. It will be cash flow negative, at least based on what the street is expecting, but the balance sheet expected to be relatively healthy here, Tom.
Romain, I got to rip up the script because we got a wall. This is unfair to you, Romain, but we got a wall of Apple, and Romain, you're perfect to talk to on this. Apple is going to add 20,000 jobs over the U.S. over the next 5 years. They have a commitment to fund a new North Carolina campus. They're going to put $1 gajillion into the United States. I mean, Romain, set up here because you're going to handle this on the close all week. The PR front for Microsoft, Google, and as we see at this moment in the Bloomberg headlines, Apple with the PR front out front of earnings.
Yeah, and this is really an outgrowth of a lot of pushback that these companies have been getting right now, really for the last several years. You go back to the previous administration and the idea of trying to, I guess, create jobs here in the U.S. or bring them back in the U.S., depending on how you want to look at it. So you're going to start to see more of these announcements. Keep in mind, speaking of Tesla, you already had Tesla, of course, building that plant down in Texas. You have a few other tech companies that have also started to expand in the U.S. Southeast and in some of those southern states here. So this is big news for Apple. I don't know all the details on Apple, but certainly it fits the trajectory of what we've seen with some of these companies.
Romain, are we going to see a stock split from Amazon? I mean, it's the one thing keeping them away from Dow Jones and all that.
Well,
is that what we're going to see this week?
Well, it's an interesting interesting question because if Jeff Bezos was still going to be there through the year, I would say emphatically no. He's pretty much made it clear.
But he's gone.
Right, exactly. So he's gone. We haven't got word yet of what the new CEO hasn't yet taken over. But when he does take over, it'll be interesting to see.
Passive index money that goes into the Dow is so important, isn't it? You know, you tell Tom about how important those inflows are.
It is.
I mean, Tom,
I mean, it's dominant.
Come on, Tom. Give me a break.
Romaine,
mate.
I just did this to bust Ferro's chop. Folks, there's so many inside jokes going in. Romaine, we're sorry to blow up your equity report today, particularly on Carnival, but we had to go with those Apple heads. John, sum up the Apple heads right now.
I'll go through them again. Apple committing $430 billion in U.S. investments over the next 5 years, planning to invest over $1 billion in North Carolina. North Carolina investments create at least 3,000 jobs. On track for the 2018 goal of 20,000 new U.S. jobs by 2023. Raising the level of commitment by 20% over the next 10 years. And Lisa's pouring through these same headlines. I have to say, Tim Cook of Apple played the politics of the previous administration brilliantly. Out of all of the leaders out there in Silicon Valley on the West Coast, I thought he played it absolutely brilliantly. And he seems to be doing a little bit of that again this morning, Lisa.
That's exactly how I would read this, the whole idea. We're creating jobs in cutting-edge fields. We're going to help support the 5G build-out in the United States. How much is this getting ahead of antitrust discussions, of higher tax discussions in Washington, D.C., right before they report earnings that probably will be a blowout?
Agreed, Lisa, but I'd also point out use of cash. It is widely expected among the sell side that this happens to be in the calendar year, John, where you get to a use of cash statement by Apple.
So, Tom, I don't want to be too cynical about this and say it's all politics.
Never.
I actually think that Apple is one of those big tech companies that needs to de-risk the supply chain a little bit because China's very much at the epicenter of it. I don't think that's a part of this story this morning, but I think you're going to see a lot more of this in the years to come. Do you have to sacrifice some margin to de-risk the supply chain away from China a little bit? Is that something some of these big hardware makers have got to think? Something they've got to think about a little bit more, at least, in the next couple of years, given the trajectory of travel between the US and the Chinese Communist Party at the moment.
Much more on this through the week, and of course, we'll give you all the perspective. And Romaine Bostic in the close, look for that in the afternoon when we get to see those earnings for real. Right now, and this is really important, Gilles Moek runs AXA, the big insurance combine out of Paris, and David Page holds court there as well. They've written a brilliant, nuanced note on your biggest worry, which is inflation. And David Page joins us this morning. David, why do you not fear a greater inflation?
Well, I think if you look at the breakdown of PCE, which is ultimately what the Fed is aiming for, very little of it is actually cyclical. So only about 40% or just under 40% moves cyclically. As we look a little bit further along, you've got a healthcare bit which is in there, and we know that we're going to see changes come through in healthcare. So there's a degree of uncertainty over that, but it doesn't follow the cycle. And the other elements of price pressure that come through do follow growth, but they don't ratchet higher. So it takes quite a lot to see this push through come through. Now, we're expecting to see quite a lot. We're expecting to see the output gap close very quickly. We do expect inflation to get back to 2% by the end of next year and then to rise a little bit more over that. But we're certainly not in the camp that suggests we're going to see a material overshoot unless the consumer expectations really start to ramp higher.
David, this is an important conversation for what happens next with rates at the Federal Reserve. What happens with the balance sheet's a different one. Substantial progress towards our goals. The big question I think many people have asked themselves over the last couple of months, what does that look like and how quickly do we get there? Is that a June story for you?
I think given that the Fed is going to tell us and keep a running check on when some time is until they think there's going to be further substantial progress. So remember, we've got two checks. They've got to get further substantial progress before they start tapering, but they're going to think that's going to take some time. So at some stage, they're going to start saying, well, we don't think it's going to take some time. And that's the first element. Now, I don't think that this meeting this week is soon enough for that, but depending on how long some time means, if it's 6 months, then by the time we get to June, they may start dropping that. But even that I think signals that come December, they'll start to announce the unwind of tapering or the unwind of the asset purchases, and that will start, we think, early next year. But I think given the lead time and the forward guidance the Fed wants to give itself on that, we may start to get some signals on that quite a long way in advance of when we would actually expect the tapering to start.
So inflation is one aspect of it. Employment is another. And it really remains somewhat of a mystery in terms of how much slack there is currently in the labor market. I mean, we see that the number is still pretty high in the United States, and yet we hear anecdotally about restaurant chains having to offer signing bonuses and even free college tuition in order to get enough employees. How much slack is there? Are we overestimating or underestimating the unemployment rate?
Well, I think at the moment, I mean, what I think we're seeing in terms of those companies struggling to get people coming on is a friction in the market. I think, jobless claims are relatively supportive at the moment. Households have had large checks come through. We know that there's excess savings pretty much across the income distribution, even if it is skewed a little bit more high. So I think people at the moment can be a little choosier about jobs than they've been able to be in the past, and they can wait for the right job to come around. But that isn't going to be the case going forwards, and the Fed needs to look through that sort of short-term friction. So I think as we look a little bit further ahead, we should start thinking about, where the unemployment rate is rather than what the short-term frictions are. And there, I think, we move back into we're expecting to see unemployment fall back. The Fed is expecting it to be below 4% over the next year or so. And only when it gets below that level will we expect to see sort of genuine slack be removed. Now, we think genuine slack will be removed as we move through next year. And that's beyond these short-term frictions coming through. And only after that do we start to see some pressures evolve. So I think that by the time we get to the end of 2022, the Fed will have basically be broadly comfortable that the outlook for its employment criteria is fulfilled. So then that takes you back to inflation. And I think that's the bigger question for the Fed from here.
David Page of AXA Investment Managers, the head of macroeconomics. David, it's good to hear from you ahead of the Federal Reserve decision this coming Wednesday, and Chairman Powell with a news conference. Full coverage, special programming with Tom Keene, Caroline Hyde and Scarlett Fu. Tom's promoting that hard ahead of Wednesday. Then we'll hear from the President of the United States addressing Congress, and some earnings in between. Apple earnings coming this Wednesday, Amazon on Thursday, and knowing my luck now, there'll be a stock split later this week just for Tom Keene from Amazon. Apple, here's the news, committing $430 billion in U.S. investments over the next 5 years, adding, Tom, 20,000 new jobs.
And what's so important here, John, I'm reading the press release. It's very, very lengthy. And basically, they speak like a government. I mean, what you do when you're building a submarine or an aircraft carrier is you put the suppliers in 38 of the 50 states. That's pretty much what Apple's doing. They are spreading out $500 billion over the 50 states, and they go state after state. I happen to be looking right now at Texas, and they speak of Sherman, Texas, and the ability to grow out there. But there's many, many other cities and states as well.
It's as big as a country. That's for sure.
Yeah.
Tim Cook of Apple saying the following: at this moment of recovery and rebuilding, Apple is doubling down on our commitment to U.S. innovation and manufacturing with a generational investment reaching communities across all 50 states. Much more still to come on this story, and the latest in Bitcoin with a big rally this Monday. Troy Gajewski of Skybridge, the co-CIO and senior portfolio manager, joining us in around about 20 minutes. Equity futures down 0.1% from New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. More on that breaking news from Apple this morning. The company is promising to invest $430 billion in the U.S. over the next 5 years. The spending includes Apple TV Plus productions across 20 states. Apple also said it's on track to meet a goal set 3 years ago of creating 20,000 U.S. jobs by 2023. And it's gone from bad to worse in India, where there have been 1 million cases of the coronavirus in the last 3 days alone. The U.S. has pledged to send India raw materials and step up financing aid for vaccine production. Prime Minister Narendra Modi implored Indians to get vaccinated and disregard rumors about dangerous side effects. Sanofi has agreed to make up to 200 million doses of Moderna's coronavirus vaccine. It's the French drug maker's third agreement to throw its weight behind another company's shot. Sanofi will take already prepared vaccine solution, put it into vials, and then package it. In the UK, Prime Minister Boris Johnson is fighting to get his government back on track. He's dealing with claims about his conduct during the pandemic and battles over lobbying and cronyism. According to the Daily Mail, Johnson said last year he would rather see bodies pile high in their thousands than order a third lockdown. Johnson's office denied he made that comment. And at the Academy Awards, Chloe Zhao has become the first woman of color to win the Oscar for Best Director. Zhao won for the film Nomadland. The Disney Searchlight Studios movie also won the award for Best Picture, and star Frances McDormand was named Best Actress. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We are a bit worried about the tightness of semiconductors. It's even already affecting some of the critical care equipment that the world needs. And I can only wish that semiconductor makers will prioritize healthcare as we are in these difficult times.
Frans van Houten there, the Philips CEO from New York City this morning. Good morning, alongside Tom Keene, Lisa Abramowicz. I'm Jonathan Ferro. Here's the price action this Monday morning. Equity set up as follows on the S&P 500, 41.69, 25, down 2 points, Tom. Nothing, not even a tenth. Stable. In the bond market, yields higher by a little more than 3 basis points to 159.32. Thanks, Tom. Just short of 121 on euro dollar, 120.86. Also pretty stable, Tom. Here's some news from Apple for you, Tom. Just for you. Apple planning to accelerate its U.S. investment, contributed $430 billion to the U.S. economy over the next 5 years and adding 20,000 new jobs. Let me just do a couple of things, Tom. In this press release from Apple.
iPads are over.
This is what Tim Cook, I'm ignoring you, the CEO, has to say. Quote, "We're creating jobs in cutting-edge fields from 5G to silicon engineering to artificial intelligence, investing in the next generation of innovative new businesses." I get that word out. Innovative new businesses. Thanks, Tom. 7:48. I should be able to speak by now. And in all our work, building towards a greener and more equitable future. So nod towards the administration. Yeah. Here's the next nod. It's in the next paragraph of the press release. Apple is the largest taxpayer in the United States and has paid almost $45 billion in domestic corporate income taxes over the past 5 years alone. We started this conversation, you, Lisa, me, talking about the PR of this, the PRness going into the news on Wednesday when we get the earnings, Tom. There it is right there in the press release. We're a big taxpayer.
Yeah, it's going to be there. And are you going to see this from Microsoft, Amazon, and the rest? And the answer is yes. Big technology is going to fight back, and they're going to do it. As I said, John, like any American aircraft carrier supplier, they're going to put suppliers in all 50 states. That's
Apple's doing that this morning.
Yeah. Let's do this. Michael McGlone has entered the door. His entourage has always came in with him and whispered in my ear, "Don't talk Bitcoin. Don't talk Bitcoin this time around." Because Michael McGlone has another life. Besides following crypto this and crypto that and what James Dimon will do with crypto or Bitcoin, he astutely follows the hards and the softs of commodities. And that is a growing theme here, as L. Abramowicz absolutely nailed out on Twitter a few hours ago. Michael McGlone, copper to the moon, but other things as well. There's a selected lift of 4 and 5 standard deviations in many commodities.
Copper is the exception. I fully expect copper to continue to rally, partly because of this electrification and decarbonization trend. And that's the problem with the other commodities. The most significant commodity on the planet, crude oil, it's running into the same problem it has before, massive elasticity of supply, and demand is just not there. And then we have this major shift towards decarbonization, electrification. Electrification means copper.
In your reading, what's the zeitgeist on what's been wrong for years, which is people predicting a new commodity supercycle? Is it there?
Way overestimating advancing technology and innovation, pressure and pushing on supply and reducing demand.
Is it disinflationary force?
Massively. Just look at since the financial crisis. M2, money supply has almost doubled, yet the price of crude oil is down 80%. That's that's deflation.
Mm-hmm. You know, let's rip up the script. I'm going to take a line from Tom. Because of this Apple news, there is a question, as John raised, about what this means in terms of supply chain resilience. How many companies are really going to be investing in diversifying their supply chain, if not bringing it home? I'm wondering how much you're seeing those supply chain disruptions at the heart of some of these increases in commodity prices, Mike.
At least very little. Let's put it this way. There's virtually every producer before the COVID crisis in terms of crude oil cannot wait to bring on more supply. OPEC spare capacity is the highest ever. It's around 9 million barrels a day. Spare capacity average is around 5. And then we look at U.S. shale and Canada tar sands and Brazil. They just cannot wait to bring on the supply. Higher prices will bring that out. The key issue we've been talking about lately is corn and soybeans. And what's really been pressuring corn and soybeans for at least 10 years is this
Corn Belt ability to bring on supply when prices come. So the highest prices in 7 or 8 years, I expect fence post planting, and unless there's a drought, prices will do what they've been. Prices will do what they've been doing for 10 years. Go back down.
Imagine Central Park, fence post to fence post.
Wow, that's relatable. I'm sure all of the Midwest is saying, okay. Mike, there is a question about why gold is not participating in this, given the fact that that is not only a precious metal that is inflationary protected traditionally, at least according to Investing 101, but also because it is a metal used on some of these industrial practices that would be supported by the infrastructure bills.
Boy, I was hoping I could get to Bitcoin, and the main reason
we're getting there.
The main reason gold is not going up is because Bitcoin is taking over.
He's taking it there.
Well, in investment portfolios, it's clearly the pattern, clearly the trend. Gold ETF total holdings are going down. Bitcoin's going back in, and it's just right now it's a wave that's not stoppable. And then there's this simple risk that what if 10, 20, 100 years from now, gold is replaced by this digital version of gold? And I think that's what's happening.
Okay.
And it's becoming somewhat irresponsible not to allocate some of your portfolio, most notably from gold, to Bitcoin.
Mike, in honor of Aberdeen, we're devoling today, so we are going to rip up the script right now and get Bitcoin, which we've got to go to. James Dimon and his bank feel like they've got to do a Bitcoin ETF, and it's going to be actively managed. How do you actively manage BitDog?
Well, that I'm kind of curious about, because the worst thing to do in Bitcoin is to try to trade it. The best thing is just hold it and put it away. At least history's proved that.
I'll say.
But I love this.
Yes, John and I note that.
To me, the key thing, Tom, is this major shift from poo-pooing it a few years ago to the shift forward. I mean, remember who invented the digital camera? Kodak. And then what happened to Kodak? I think our modern companies are getting that. Look what happened to Blockbuster, Netflix. It's happening.
So I'm going to rip up the script here, folks. For many of you that know that, I lived and breathed Open Me First for years. Are you telling me most of American industry is going to Kodak eyes here over the next 20 years?
They have to adopt digitalization of money or they risk falling behind. They have to. So it's in that unique stage right now of human nature. If you don't, you risk falling behind. So that 1 to 2% that you can risk, you have to.
John, the Super League would have made it if they'd just done it digitally.
Maybe they should have done. Mike McGlone, Bloomberg Intelligence Commodity Strategist. Mike, thank you.
Every time he comes on, I learn something. What's that about?
Likewise. Troy Gajewski will come up in about 5 minutes to talk about the investment side of this story as well. Looking forward to that. Just to return to the Apple news, here it is in a headline. We are not Amazon. They say they are the largest taxpayer in the United States and have paid almost $45 billion in domestic corporate income taxes over the last 5 years alone. This is the news crosses the Bloomberg terminal in a press release from the company that Apple plans to accelerate its U.S. investment, contributing $430 billion to the U.S. economy over the next 5 years. And Lisa, adding 20,000 new jobs in the process.
Look, immediately it looked like a PR job ahead of their earnings release tomorrow, right? I mean, we are expecting them to announce blockbuster earnings. They also have been subject to huge antitrust concerns, particularly with their iTunes store and how they deal with that.
Yeah.
This trying to get ahead of this, distinguish themselves from Amazon, make sure that they're not lumped in, and perhaps avoid some of the most penalizing taxes. But I've got to say, this press release reads like a political advertisement, John.
State by state as well, what they're going to do in each one. Massachusetts, hello, Senator Warren. In 2018, Apple announced it would add hundreds of new jobs in the Boston metro area with around 200 team members already working in the region. Apple plans to add several hundred new jobs by 2026. Much more on this story still to come. Troy Gajewski, Skybridge co-CIO and senior portfolio manager, joining us shortly on a Bitcoin rally and where he stands on things. In the bond market, yields are higher by 3 basis points to 158.96. In the equity market, what did you say, Tom? We're stable.
I think the whole thing is transitory.
We're stable on euro dollar at 120.84. Helpful as ever. Tom Keene, Lisa Abramowicz.
That's a value add.
This is Bloomberg.
We still have the long-term structural forces that weigh against significant acceleration in growth.
All eyes really are on what constitutes substantial progress right now.
The markets are so overbought, enthusiasm is so high that I think we're approaching that stall speed for a little while.
That reopening related pickup in growth, does that translate into a sustained increase in demand and a sustained increase in inflation? And that's what the Fed's watching for as well.
What's this economy look like 6 months, a year down the road? And that's where I think you're going to see this real inflation, and it's going to be more persistent than people are currently pricing in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television across this nation, and in North Carolina as well. This week, the Fed. This week, the president. This week, big technology earnings, all pushed aside, John Ferro, by $500 billion in Apple investment.
Apple on Wednesday, Amazon on Thursday, and a big conversation about taxes down in Washington, D.C. for these two big tech companies. A press release from Apple. You went with a headline number, the amount of investment we'll see in this country in the next 5 years from Apple. But it's the headline on taxes in the press release that I think kept everyone's attention, and rightly so. Apple pointing out they're the largest taxpayer in the United States. That's not done for no reason, Tom. There's a big reason for that statement there in that press release.
Well, they're there, and it's a precursor to what we'll see from earnings, huge revenue gains, and a dominance, as we've heard from our many guests, over other sectors of the market. John, an open question on a tumultuous week with your reading over the weekend. What are you observing as we go through this week?
Huge focus on pay-fors down in Washington, D.C. The conversation has changed. We looked down to Washington at the start of the year, and we're just talking about pure deficit spending. Now we're talking about taxes, capital gains, pay-fors. It's a very different conversation. And when the emphasis shifts, this is what Mohamed El-Erian was talking about on Friday, the change of emphasis, you've got to pay attention. There's been a shift in emphasis down in Washington, for Wall Street at least.
Well, you speak of Dr. El-Erian in Cambridge and, of course, out in Southern California. Lisa, I was riveted this weekend over Padres-Dodgers baseball, and the real signal there was 15,000 fans at Chavez Ravine last night. I mean, we are trying to get back to a normal American economy.
I'm smiling, so I was wondering whether you wanted me to weigh in on baseball, and I thought that was
He's obsessed
unusual.
with the Padres these days.
Clearly he is. But
My
I will
National
say,
League team this year. Go Padres.
Look, I will say this. The United States is actually on a very good trajectory. Yes, the pace of vaccinations is slowing. There are concerns about vaccine hesitancy. The U.S. is in a very good spot, certainly relative to the rest of the world. The tragedy that's happening in India is massive. How much does that diminish global growth? How much does that diminish demand for certain commodities? I'm thinking of oil in particular. That was something that Julian Lee of Bloomberg Opinion highlighted over the weekend. But Tom, the virus has not gone away. How do we get out of this? We will get out of it, but the trajectory is less clear.
No, it's mergers is what we're seeing. I saw a small bank merger of New York and Michigan. We see the continued battle over Canadian Pacific. John, moments ago, W.R. Grace, a name from another time and place, taken out by Standard Industries. And John, this is about cheap money. And again, the gloom crew not seeing the action of corporations, whether Apple or smaller companies.
It's quite U.S. specific, though. Let's be clear about that, Tom. We came into 21 talking about global synchronized growth. You'll get a lot of global growth. It won't be very synchronized, and I think that is a nod towards what's happening in India at the moment, a nod towards what's happened in Europe in the first quarter, and a nod towards an better than expected U.S. economy, certainly compared to where we were 6 months ago.
Red and green on the screen, fractionally, 16.90 on the VIX. And John, to me, what we see in the data check is a data check that's gone nowhere for weeks. What do you observe in the yield market?
You do the data check and I'll disrupt it. Come on.
I'll do the data check. Yields are up. The real yield,
Stable,
negative 0.75.
Transitory.
Get out of cash. Transitory.
Thank you.
Euro. No one cares.
Okay, no one cares. There we go. There's your data check on radio and TV this morning.
It's not very effective, is it?
All we care about is getting to Troy Gayeski. We've got a lot to talk about, including John and Lisa are riveted by Gayeski's Bitcoin call. He is with Skybridge and their co-chief investment officer. Troy, the hedge funds are addicted to big technology. We've seen that through every cycle. I'm reading that hedge funds are doing better. What is the linkage of alternative investments to 4 or 5 big technology names?
Yeah, it's actually interesting you bring that up, Tom, because there has been rotation, particularly back into Facebook and Amazon, less so Apple. Many hedge funds went long growth coming out of the pandemic and then focused and switched their focus to cyclical recovery. And now you see that moving back, given that valuations have come down as much as they have. So certainly the dominance of the big 5 names will be more important the next 3 months than they were the last 4. But if you drill down to a subsector within technology that we find very fascinating, we look through the holdings of our underlying managers, we find that semiconductor equipment right now is particularly compelling because valuations or semiconductor equipment fabrication because valuations are very reasonable, and those are both cyclical recovery stories and secular growth stories. And plus, there's a play on the continued nationalization or divergence of the economy between the U.S. and China. Because if you look at what happened to Intel, which lost its lead for a manufacturing of very thin films and very high potency processors, we can't allow that to happen in semiconductor fabrication equipment. So when we drill down into tech, we think that's a pretty compelling space that hedge funds are starting to rotate into right now.
Troy, I'm doing my best Tom Keene impression today, and usually when I get the first question to a guest, he totally ignores it and starts with something else with no follow-on. So I'm going to do that right now. Bitcoin. Let's talk about Bitcoin. Last time we spoke, you'd allowed that to grow into 13% of your holdings of your portfolio. Can you walk me through where you are now and what's driving things for you?
Yeah, so at the peak coming into this month, it was actually a little over 14%. So that's dropped back down to 13 and change, given the obviously correction we're going through right now. But, you know, as we spoke about last time, really, there's three keys to our thesis. The first is, you know, hyper loose monetary policy. Hyper loose monetary policy is what we did coming out of the crisis. Now we have 5 hypers in front of that. And M2 growth's been growing around 18% in the U.S. so far this year. You know, the Fed will come up with updated data on Tuesday to see how fast it grew in March. But given the continued expansion of their balance sheet, we don't see that going below nominal GDP anytime soon. Obviously, the desire for every central bank to continue to debase their currency and budget deficits as far as the eye can see. So that's the macro case. It's hard to imagine a better macro environment for an alternative to fiat currencies. And then if you look at the micro case, and you saw this morning with JP Morgan's announcement, several weeks ago with Morgan Stanley's announcement, and obviously some of the institutional interest that started really in Q4, you know, we're going through a very similar adoption story to what we did with gold from really 06 to 2013, where the world went from, you know, basically no gold to 1 to 2 to maybe 3% gold over time. And that's very different this cycle than the last two. We expect that to continue. And then thirdly, you know, you have the natural dynamics of the halving cycle, right? And I think Mike talks about this well. But when you cut new supply in half, if you just keep demand constant, prices are going higher. But when you cut new supply in half and demand increases substantially, obviously prices are going meaningfully higher. And so, you know, we still think we're in the middle innings of this bull market for Bitcoin. Shocked if it wasn't meaningfully higher over the next 3, 6, 9 months. So we continue to maintain the position size where it is.
That's what I wanted to talk to you about, though, Troy. Maintaining the position size. Just the perspective of a PM right now. How concentrated do you want that bet to be within the wider portfolio? Your tolerance levels around the volatility. How do you make those decisions?
Yeah, so look, I mean, you have to look at near-term correlation behavior, longer-term correlation behavior. It's very important to juxtapose it against other assets in your portfolio. And so, for instance, if you had a 90% of your portfolio in go-go growth, right, you know, high beta, mid-cap, small-cap tech names, it might make less sense to have a 13, 14% position in Bitcoin. But when the majority of your portfolio, like us, is tied to the real economy, tied to distressed credit, structured credit, more market neutral, multi-strategy or equity exposures, convertible bond arbitrage, which by definition is a or a market neutral strategy. You know, having a 13, 14% position in Bitcoin, we think is appropriate at this stage of the cycle, because that will slightly elevate our volatility. We expect volatility in the range of 8 to 12% this year versus 4 to 8, which is our long-term target. Yeah. But we think that's one of the unique areas where you're getting paid for that volatility, right? If you think of the NASDAQ right now, could the NASDAQ go up another 10 to 15% this year? Yes, it could, but you're going to experience more volatility than you certainly had, or two-way volatility, I should say, than the second quarter of last year, for instance. In Bitcoin,
Troy, you seem to be freezing up a little bit. I do want to perhaps we'll get you back.
I think it's fair to say he's gone, Lisa.
We've lost him.
Troy
I did want to say.
Skybridge with some technical issues there.
Oh, well.
We'll get Troy back on another time. Lisa, you can still make your comment on
That
Bitcoin.
wasn't my fault.
I wanted to know.
John, you want to play that. I made Troy, that wasn't my fault.
I wanted to know what happens after 6 to 9 months, right? If we're in the middle of a bull market, are we in sort of a secular growth period for Bitcoin and there isn't a big bust? Or does he foresee a big bust when suddenly the big macro trade ends? I mean, that's really a question here. Are we looking at a new crypto asset that's here to stay, or is this a trend that you want to ride for a bit longer?
What did you make of what he had to say, Lisa, about the composition of the wider portfolio? If you're really concentrated in big growth names, then maybe this isn't for you. But if you're in the stories that he's talking about, credit, distressed credit, then maybe an allocation of that size is appropriate.
It's the idea of being paid for volatility. You're being paid nothing in these areas of credit in distress. There is no distress if you take a look at high-yield bond yields. And when you take a look at that, I mean, but given the sense of the lack of being paid, you might as well take a larger wager on something that has a bigger reward to that risk, John. And that, I think, is a fair assessment. The question is, though, that longer-term look, is this perhaps a fad?
It works. It has worked. I don't want to say it works. It has worked. Tom, when do you rebalance? Do you allow something that volatile to grow into 13, 14% of the portfolio? I'm getting you going. I'm pushing your buttons. You tell me.
I don't.
What's your reaction to that?
Full disclosure, folks, and I don't know if I've ever said this on air. I don't believe in rebalancing. I've studied it.
Walk us through it, Tom. Why?
I think there's two issues. I think it's a marketing idea. I think there's two ideas on rebalancing. One is the actual concept, and far more important, John, is the idea of how often you rebalance. I really question the oftening rebalance every quarter, every six months. I really have trouble.
Did you just say oftening?
Oftening. I think it was building on infrastructure.
I'm trying to be like Aberdeen, and where Lisa says there is no distress. I think that's.
I agree. Yeah. Coming up down in Washington, D.C., Greg Valliere of AGF Investments on a PR statement from Apple that's got everyone's attention.
Nice, John.
Coming up shortly. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Apple will speed up its plan to invest in the U.S. The company says it will contribute $430 billion to the U.S. economy over the next 5 years and add 20,000 jobs. That amount includes everything from spending with domestic suppliers to capital expenditures. Productions for Apple TV Plus will be spread across 20 states, and Apple will create a new campus and engineering hub in North Carolina's Research Triangle area. In India, coronavirus infections hit a record high for the 5th day in a row. The government reported more than 352,000 new cases. Overcrowded hospitals are turning away patients because they're running out of oxygen and beds. The US and Europe have pledged to send aid. Americans who've struggled to find an affordable starter home may soon get a break, according to Realtor.com. Many owners who've been wary of listing during the pandemic are getting ready to do so now. The real estate listings website expects about 10% of the nation's homes to hit the market this year. That's up from 8% in a typical year. And a quarantine-free air travel bubble between Hong Kong and Singapore is now set to begin May 26th. The two sides have been in talks for months. Hong Kong says people must have had 2 vaccine doses at least 14 days before flying. Singapore has no such requirement. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
There's a deal to be done on infrastructure, I think. There's probably an $800 to $900 billion infrastructure bill that we could all agree on. Watch Joe Manchin. Joe's going to be a key player here. I met with him a couple of days ago. I think there's a sweet spot on infrastructure where we can find pay-fors that won't hurt the economy.
Watch Joe Manchin. Senator Lindsey Graham there speaking to Fox News Sunday over the weekend from New York City this morning. Good morning. There is a deal to be done on infrastructure, $800 to $900 billion. That is the view of more than one Republican at the moment. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. Here's the price action for you this Monday morning. In the equity market on the S&P 500, down not even a point. Down not even a point on the S&P at 41.71. Yields are higher by 3 basis points on 10s to 159.14. Euro dollar is stable at 120.85. That's your word of this morning, Tom. 120.85 and down about 0.1%. Crude, a little bit lighter, down 1.6% on WTI, $61.15. News of the morning from Apple. Some of you might call this a press release about investment. Other people might say it's come from the marketing team and it says, Dear Washington. Apple committing $430 billion in US investments over the next 5 years, creating an additional 20,000 new jobs. And then, Tom, in this press release, as you indicated, and I alluded to earlier, state by state, California, Colorado, Massachusetts, Texas, Washington, Iowa, one by one, they just go through what they're doing for each and every state.
First thing I thought of, John, here, and folks, I think this is a huge, huge story, and frankly, I would suggest it is original. Is technology becoming like our defense contractors? We have the perfect guest now to drive forward this conversation. Gregory Valliere joins us with AGF Investments. Greg, we've got to rip up the script here. We see Graham of Carolina and the new East Coast hub for Apple in the Research Triangle of North Carolina, and all I could think about was Norfolk, Virginia, the aircraft carrier industrial base coalition of 2,000 suppliers in 46 states to the United States Navy. Apple's becoming like the suppliers of the U.S. Navy. They're spreading it out.
Well, I'm a cynic, Tom, and I would say two things. Number one, I think Apple realizes that big tech is under the gun from a regulatory standpoint, from a tax standpoint. Secondly, Tom, I would say that I'm not sure where we're going to find all the workers for these programs. We're going to hear Joe Biden on Wednesday night talk about huge new stimulus. And when I walk around downtown D.C., what I see is help wanted signs everywhere.
We see help wanted signs, and we see the wage issue, and that's, of course, center for this president. He is the jobs president. What kind of jobs is this president?
Well, I think obviously infrastructure is number one, and he's going to talk about jobs, jobs, jobs. But at the same time, there is an acute shortage of skilled labor, nurses, construction workers and housing, and unskilled labor. And I think that tight labor market is going to become even more acute until September 8th, when we end our unemployment weekly benefits of $300. People aren't going to come back to work until September.
Greg, I want to build on this idea of a lack of workers and dovetail that with the poll that was out over the weekend about the support, popular support for Joe Biden. It indicated the one weak spot for him was immigration, was border issues. What have you seen so far out of the Biden administration? How much does it differ from the Trump view?
Well, I think he's off to a pretty good start, Lisa. His job approval numbers are good, not great. But I think he really has badly stumbled on immigration. I think the administration knows it. His initial call for a very small number of immigrants was strongly opposed by most Democrats. And, you know, if there's one theme in this first 100 days, it's that he's moved quite sharply to the left. So I do think he'll agree to more immigration, and we need him because of the shortage we have now in workers.
One thing that you do really well, Greg, is you sort of game out the likelihood of certain plans getting passed. And right now we're talking about the $2.3 trillion infrastructure spending plan that he's proposed. What is the likelihood of a plan of that size going through with taxes even close to what Biden has put out there?
Well, he's going to have to take a haircut, obviously. I think he'll get maybe 1.7, 1.8. That's still an enormous amount of money over 8 years. And I think on taxes as well, he'll take a haircut. I think that, for example, there's no way in the world capital gains is going to wind up over 40%. That just isn't going to happen.
I mean, every time we take a haircut, I've got to defer to John Farrell. Why don't you pick it up, John, as Valliere takes a haircut?
Wait. You throwing shade at me, Tom? Did I deserve that? What are we ramping this up to today? How hard do you want me to come back?
Oh, my goodness.
I'll be nice. You mentioned that ABC Post poll. I think it is so important. 52% in favor, 35% opposed to the bill, the infrastructure spending bill. Here's the bit for me and for a lot of people this morning. 4 out of 10 Democrats and 2 out of 3 independents want a compromise. Greg, how important is that right now, the mood of the country around compromising on infrastructure spending?
Yes.
I think he has to, and if he just goes to reconciliation and doesn't compromise, I think that will hurt him. But again, guys, let me just emphasize, I think on Wednesday the GDP number for the first quarter could be close to 8%. The Atlanta Fed is at 8.3. We can't grow at this level without starting to worry about inflation, and that's the one thing I think they're too sanguine about.
Greg Villiers, thank you so much. Too short a visit. Mr. Villiers at AGF, I can't say enough about his required read, his morning note. Get that from AGF of Toronto and New York. John, that was wonderful. And I really have to say, John, you came right back with a really, of course we are. But
Should we
John,
talk about it? Let's have this discussion. I think it's so important this morning. What is the male obsession in America with hair, Tom? Where does that come from?
I have no idea.
You're holding on to it as long as you possibly can.
You got that right.
No, for me, just get rid of it.
I'm sitting
in Europe, we just get rid of it. It looks good, clean, sharp.
Okay.
The US male, somewhat insecure about hair, Tom, comes up a lot in this country. What's it about?
It does. I mean,
I'll bring in my clippers.
Plugs,
we'll make it happen for you.
My plugs are working like nothing.
John, is that what they are on top?
Yeah, of course it is. They take it here and here. They put it up here. On radio, that looked better on radio than TV.
I really did,
John,
guys.
seriously, you nailed it with Villiers talking about the mood of compromise. You got to be kidding me. Where's the actual compromise?
Tom, look, the president moved the goalposts. He said he was going to unite Washington. Then when he got to Washington, it was about uniting the country.
Right.
Well, if it's about uniting the country, in this poll at least, and it's one poll granted, this country, the message is pretty clear from this country. They want to compromise on this bill. They don't want to go it alone. 4 out of 10 Democrats, 2 out of 3 independents. That's pretty loud and clear, isn't it?
The next 100 days gets you out into the end of this year some point. And how much closer is that to the beginning of primary season to get to the election of 2022? That's where the compromise. These guys are petrified.
I do also wonder, there is a shift in the Republican tone. The idea that Lindsey Graham said we're willing to compromise an $800 to $900 billion deal that we wouldn't have to pay for. This is not very Republican in terms of deficit
they don't want
spending.
the corporate tax hikes,
well,
Lisa.
Sure, I understand that. But if you think about just how much that tone has shifted, I wonder how much staying power that has.
They're talking about negotiating with Senator Manchin. Let's be clear about this, and not President Joe Biden. It's look out for Senator Manchin. That's the language from Senator Graham at the moment. Coming up, Guy Labasse of Jenny Montgomery Scott, Chief Fixed Income Strategy. Looking forward to that. Equity futures unchanged on the S&P. Euro dollar 120.83. Tom Keene or me might have a black eye in a commercial break. Find out next. This is Bloomberg. From New York City for our audience worldwide, this is Bloomberg Surveillance Live on TV and radio. Guess who won the fight in a commercial break?
Their relationship is transitory.
I mean, come on.
Equity futures unchanged on the S&P 500.
How far north of London did you come from?
We got some data. A couple of hours north. It's Michael McKee for more. Morning, Mike.
Good morning, John. I don't even know how to, come on after that.
How do you follow that? Just read the numbers out, Mike.
Durable goods orders. We got a little bit of good news. They're up some, up 0.5%. That follows a 1.2% decline in the month of February. So we do see an increase, but it's much lower than the 2.3% that had been forecast. Ex-transportation, though, up 1.6%. So it does appear that the problem we have had is in transportation, and I'll find the table and see what's going on there. Capital goods orders, non-defense ex-air. This is the one that economists and everybody cares about because it tells you something about business orders. Up 0.9%, follows a 0.9 decline in the month of February, but the forecast was for 1.7%. So we come up a little short on that as well. Capital goods shipments. Don't have that number right in front of me. Yes, I do here. Percentage change up 2.5%. That follows the February number of negative 3.6%. So shipments does tell you something about GDP coming in a little bit stronger than perhaps we had thought, and that's been the theme in the economy this week because we get the first quarter GDP numbers.
Michael, the theme we saw in research reports this weekend was lifting of GDP. What does the lifting of GDP mean for Jerome Powell?
Well, it's not going to mean a whole lot for him because, as they say, they're waiting for, and I hate to use this pun given your black eye there, but the whites of their eyes in inflation, they're waiting for.
Put my glasses on. Maybe they'll hide it.
It may change what people think about the Fed. not what the Fed thinks, but what the market thinks. If we get a strong GDP number, and then next week we get jobs, and they come in strong, then you might see some people pulling forward at least the idea of when they're going to talk about tapering, that sort of thing.
Mike, in the past, durable goods orders indicate the propensity for big companies to invest and to stockpile assets, particularly airplanes. How idiosyncratic is this moment, given some of the supply chain disruptions?
Well, with airplanes, it's always very difficult, and this is why we see a big decline in durable, not as strong a gain in durable goods, especially transportation. Boeing, it looks like, new orders were down 46.9%. Now, with Boeing the month before, they were up 358%. So it's really hard to get a read on this because the planes are just so expensive that when they get lumpy orders, it makes a big difference in the overall numbers, which is why we like to look at the ex-transportation. It's kind of you almost have to throw out airplanes because of what went on with the 737 MAX, what's gone on with air traffic, and the fact that the airlines didn't need new planes for a while. Yeah. It's just really hard to get a read on what transportation equipment aircraft really means.
Well, Mike, what about what's going on with autos? These manufacturers can't make them quick enough. You've seen what's happened in the second-hand auto market in this country. Yep. It's unbelievable.
Well, new orders were down for motor vehicles. They were up, 5.5%. Shipments up 5.8%. They would be much stronger, but they can't get the parts. They've had to shut down some of the plants because of the computer chip shortage. That may show up, too. We'll watch that in jobs next week.
Michael McKee, thank you so much. A busy week here. And, of course, Mr. McKee with the rudest question at the Fed meeting on Wednesday. Look for that in our special coverage. Huh?
I will not hit Jay Powell.
Don't hit Jay Powell. He may swing back.
We've got to share this. For our audience on radio, this black eye you've got right now looks so authentic. Are you going to clean that makeup off?
Well, no, I put my glasses on to hide it. It's just... that's what happened, folks. I'm sorry. On Bloomberg Radio Worldwide, it's real, it finally leaks out that Ferro and I really don't get along. And I made a joke. And,
I think Tom have settled on that idea for a long time.
I usually pull back, but,
You let him get in a good punch.
Gila Boss joins right now with Jenny Montgomery Scott, their chief fixed income strategist. Guy, what we're hearing from conversations today is maybe the inflation fear is a bit overrated. Is it?
Probably, at least on the margin. Right now the financial markets, whether you measure it by break-evens or inflation swaps, are pricing in round numbers about a 2.4% long-run inflation rate. So that's a CPI measure. So they've already priced in essentially the Federal Reserve hitting their target. And, even that, given the last, say, decade and a half of inflation misses, really signals a pretty high degree of confidence. So I have to argue at this point, at least for this moment in the cycle, that a lot of inflation is already priced in at this point.
It's amazing to me when we compare and contrast what we're willing to tolerate in America versus, say, in the UK, where we've seen prints north of 3% in recent years, higher than that going back to Governor King's tenure. Why do we judge the Federal Reserve so differently in this market? In fixed income, as market participants, why is the bar different for them versus, say, the UK? When they were talking about tolerating higher inflation in the UK, it was all right if it was north of 3. Why in America is something north of 2 still somewhat controversial?
That's a really good question. I think it's probably a little bit cultural. Since the 70s in particular, the Federal Reserve has had a very strong political and cultural influence through the 70s into the 80s with that very high degree of corrosive inflation in the U.S. It became sort of embedded as a fear, and also something that politicians were particularly concerned about as well. I think the Federal Reserve takes on a certain degree of importance because, to borrow from one of my professional colleagues' phrasings, they're essentially the dealer of last resort, not just for the United States, but for investment instruments across the world, right? And so because of the massive size of the U.S. dollar financial markets, because of the massive size of the U.S. dollar bond markets and the importance of treasuries in the global financial market in particular, and the Fed's status as, again, the dealer of last resort for the treasury markets, they've taken sort of an outsized importance in global financial and global monetary policy in a way that, is maybe a little bit unwarranted in the sense that it's still roughly, what's round numbers, about 20% of financial markets.
So, Guy, you say that a lot of the inflation has already been priced in. Has tapering been priced in? Tapering as soon as perhaps even late this year, early next?
Yeah, so It's harder to judge that, right? We have very, very clear metrics about estimating or knowing, in fact, what degree of inflation compensation is priced into markets. But when it comes to Federal Reserve purchase volumes, a lot of that's probably going to be reflected in real yields. You know, my sense right now, and throughout some of the responses to things that Powell and his colleagues have said over the course of the last few months, is there's not a lot of tapering priced into markets. That when the Federal Reserve does start warning about the process, we could see an increase in real yields. You know, we're still some time away from that, realistically. And in fact, you know, come this FOMC meeting, we may see an increase in long duration Treasury purchases as part of the outcome.
That's something that people have been speculating will happen for a long time. What about within credit? We've seen the post-crisis tights in spreads. We see price to perfection. We've got the likes of Troy Gajewski saying you'd rather buy Bitcoin than you would credit because it's price to perfection in a sense. I mean, from your perspective, do you agree, especially given the fact that you could see real yields rise and thus the all-in yield rise, even if inflation's already priced in?
Well, on the Bitcoin comment, put it this way, I mean, credit pricing, investment grade credit pricing didn't drop 10% in a weekend a week ago. So in terms of volatility, you know, investment grade credit is far, far, far less volatile than Bitcoin. But you're right in the sense that valuations are fairly steep. The thing is, we're still, you know, late, early to early mid portion of the economic and credit cycle. Typically, spreads don't trough until at least the later portions of the economic cycle. So realistically, we're probably going to see within a couple of years here all-time tights on investment-grade credit spreads. And so that's going to bleed through to high yield as well. One of the factors that's sort of overlooked in this discussion is that if you look at, for example, last week's big bank earnings release, they released a huge amount of loan loss reserves. And banks can do a few things with these loan loss reserves. They can give capital back to shareholders. We'll see how that works out. Or they can increase their lending books, right? And so on the margin, this is going to increase demand for lending because banks have more capital, and that'll help create competition for credit and narrow spreads even further.
Do I suggest, Guy, from your conversation that you're suggesting we will see some form of bear market in bills, notes, and bonds?
Well, so for the short term, I think we've probably tapped up against the short-term high in interest rates on the long end of the yield curve. I think we've got sort of a tactical bull market, if you will. We have room for interest rates to move down, and use 10 years as a benchmark, probably about 15 to 20 basis points from here before resuming the longer-term move upward. But that move upward is going to be much more gradual. It's very unlikely to be a repeat of that sort of buyer's strike we saw in the last week of February, the first couple of weeks of March.
Guy, always smart. It's been way, way too long, and it's good to catch up again. Guy Labas there.
Thank you.
Jenny Montgomery-Scott, Chief Fixed Income Strategist. Looking forward to the Federal Reserve decision this coming Wednesday, a news conference with Chairman Powell as well. A little bit later on the Open, in the next hour, we'll catch up with Vichy Trupator of Morgan Stanley, US Fixed Income Research Head. Tom, the conversation will continue, and I think Morgan Stanley's been well on top of this, Lisa, on their cycle call, which has got everybody's attention. It's not just about the near term, the growth this year. It's about a cycle. Shorter, hotter. That's their call.
Yeah, which really raises this issue, how much more can interest rates rise in the long term, the long end borrowing costs rise in the U.S. if you believe we're heading right back to that low growth, low inflation kind of standpoint after this massive blip that we're going to see probably in the next couple of months.
They don't seem to believe that. Yields are up a couple of basis points on a 10-year to 157.73. I came into work this morning expecting a little bit of a quiet morning ahead of a busy week.
Yeah.
Tom Keene, anything but.
No, it's anything but, and it's a news flow. And again, this goes back to a boom economy. I'm going to suggest, John, that the mass, the inertial force of all that GDP pushes a lot of other assumptions aside. And frankly, strategists have a black eye over the first 4 months of this year because they were talking about movement. And guess what? The movement isn't there. It's been stasis.
Final question for me. What do you think the response will be down in Washington, D.C. to that press release from Apple this morning?
It really, really interesting, John. I think they're going to have to massage earnings, and they've got to massage their prosperity. The four companies, their core profitability is just extraordinary. How do you sell that to politicians working with America that's flat on its back?
Do you think the flavour of the press release on Thursday from Amazon changes a little bit too, Lisa?
I think that it already has.
Yeah.
They've gotten more and more political because they realize the reality.
I look for a stock split. I'll say it
Stock
right here.
split on Thursday.
They got to shake things up.
Puts their
They
mark
got
on
to
this
shake
company.
things
Is that
up.
how you shake things up, Tom? Stock split.
Yeah.
I can't
Okay.
take him seriously.
Neither
I'm
can
sorry. Put their mark on. I got that. I heard that.
Tom Keene, Lisa Abramowicz, Jonathan Ferro. I'm getting out of here.
Enjoy.
And if HR's outside the
That's
door
okay,
waiting,
Lisa. It'll be transitory.
it's a fake black eye. I know they're already about to email. Take everything so seriously.
They do.
This is Bloomberg.
You're a mean person, Mr. Grinch.
With the First Word News, I'm Ritika Gupta. It's gone from bad to worse in India when there have been 1 million cases of the coronavirus in just the last 3 days. The US has pledged to send India raw materials and step up financing aid for vaccine production. Prime Minister Narendra Modi implored Indians to get vaccinated and disregard rumours about dangerous side effects. In the UK, Prime Minister Boris Johnson is fighting to get his government back on track. He's dealing with claims about his conduct during the pandemic and battles over lobbying and cronyism. According to the Daily Mail, Johnson said last year he would rather see bodies pile high in their thousands than order a third lockdown. Johnson's office denied he made the comment. Jack Ma's Ant Financial is taking a step to boost employee morale. Bloomberg's learned that the company will offer 0 interest loans to employees who own illiquid stock options and is trying to prevent a potential exodus of staff who had expected a windfall last year before the company's IPO was halted. And at the Academy Awards, Chloe Zhao has become the first Chinese and Asian woman to win an Oscar for Best Director. Zhao won the film Nomadland. The Disney Searchlight Studios movie also won the award for Best Picture, and star Frances McDormand was named Best Actress. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's just a human rights and human health catastrophe to have this many cases and deaths, and the potential of suffering in India is really just staggering. If you think about a situation where they don't have oxygen, where the hospitals are filled, I mean, it is just really compelling the world to jump in and help, and to think about the importance of making sure in the short term that they get the resources they need.
These have become very serious conversations. Sharfstein of Johns Hopkins there, Lisa, I, and John have really, yes, we've enjoyed it, but it has become so difficult to speak of this pandemic. With us now, with their true expertise in microbiology from the University of Washington and their definitive work, Deborah Fuller joins us, and we say good morning to all of you. Dr. Fuller, I've got to go back to our history, which is it's not smooth. And if we go back to the horrific child killer, diphtheria, it was 1910, and then an iteration of improvement in 1920, and really 30 years out to the advent of World War II, where we really finally figured out how to eliminate diphtheria. Should we be using that timeline with this horrific pathogen?
I think we have to have an accelerated timeline compared to that. Otherwise, we're just going to be fighting this virus for decades to come because of, as we're seeing in India, this basically a tinderbox of insufficient vaccines and returning old habits, lifting restrictions, and the next thing you have is the emergence of new variants that can now lessen the efficacy of our current vaccine. And it's a cycle, it's a playbook we're going to see over and over again unless we can get on top of it and quickly.
Do you, looking at bacteriology and virology, just assume that within the joy and the excitement of 2 vaccinations, et cetera, that we're going to have a regime of COVID-based vaccinations out 2 years and 5 years and indeed forever?
We might. Viruses are a bit different from bacteria in the rate that they can undergo this rapid mutation to result in new variants, and so we're constantly just could be chasing it. But there is a potential for us to really get on top of it. That we've seen viruses eradicated before, and we've seen our ability to get on top of viral mutations. But with flu is an example where we do get vaccinations every year, simply because it's a type of virus that can undergo very rapid mutation and genetic drift from one year to another. And so there is a thinking out there that we may have to come back annually for booster immunizations that will update our immunity to fight the new variants that will just continue to fester in the world. SARS-CoV-2 is becoming endemic. We have a pandemic, and we anticipate that the virus has a good chance of becoming endemic and just resurging in different places in the world.
Dr. Fuller, you started the conversation talking about India and how it's a perfect storm, it's a petri dish, and it's definitely an accident waiting to happen when it comes to new variants. Do you feel like other health officials, particularly those in charge of the United States policy, fully appreciate or at least have articulated this risk?
I'm not so sure that they have. It's just it boggles my mind why it's just there's a humanitarian need there too, but there's also, if you want to be selfish about it in a way, it's like we can't just have a nationalistic attitude about just vaccinating our own country, because it's really just going to come back to eventually bite us in the butt again if we allow countries like India to have these kind of surges and to have new variants. The risk of new variants now emerging that can now potentially even make our current vaccines less and less effective.
What have we learned about how quickly this disease, this virus mutates in terms of the variations we've already seen come out and in terms of any of the virology that people are watching on the ground?
Yeah, I think it ended up being a lot faster than we anticipated. We anticipated SARS-CoV-2 would be coronaviruses in general don't typically mutate as quickly as, say, influenza. And yet within within less than a year, we have multiple different variants emerging that are more transmissible, that are more pathogenic, that could weaken the potency of our vaccines. And so, but it really has to do with the fact that it's just so prevalent, and there's just so many different areas where the amount of virus is quite high. And so just allows that opportunity for new mutations to come in quickly. So it's a race, and we're right now, I feel like we're losing it.
Deborah Fuller, south of you and way south, there are two very good baseball teams, the Los Angeles Dodgers and the San Diego Padres.
Here we go.
They enjoyed 15,000 people at Dodger Stadium last night. Should we begin to refill our stadiums?
Yeah, I think that we have to start looking at that, because that's, again, creating another tinderbox, if you will, and start having conversations about, okay, if we're going to start to have gatherings like this, how are we going to combine that with, say, policies on vaccination and whether you've been fully vaccinated or not. So I don't think that should be something that should be something we should seriously consider, or we're going to create another petri dish.
And we see that within some of our news flow today. Deborah Fuller, thank you so much. The University of Washington School of Medicine. Lisa, as John said, it was supposed to be a quiet Monday. It is not. And to me, so much of it is the distinctions that are out there, whether it's earnings, the Fed, and certainly the battle in the market over rates and inflation.
An incredible amount of policy uncertainty just highlighted by this week's roster of events, whether it's Fed Chair Jay Powell and the decision by the Federal Reserve on Wednesday that'll be delivered, whether it's President Biden's speech, whether it's this idea of taxes that Apple seems to be trying to get ahead of with this press release talking about how much taxes they pay and how much they are going to invest in the United States.
Yeah, but Lisa, the heart of this, and you've provided great leadership on this, is the clear message that there are two distinct and separate and widening Americas. It's irrefutable.
Yeah, and we've seen this on a growing level, that the lowest income individuals are hardest hit on the way down, and they take the longest to come back. And that's what President Biden is trying to combat, or at least use as ammunition to push forward a number of different policies. I do wonder, though, the willingness when you get Democrats also even unable to agree on what kind of tax regime would be necessary to pay for these types of plans.
Well, we will see. Certainly compromise in the air, as we heard from Senator Graham this morning. Greg Villiers helping out there as well, and we'll have to see where the compromise in. Lisa, help me with a data check here on yields, higher yields.
Yeah, we are seeing higher yields. Equities are doing pretty much nothing. I do think that it's interesting to see the NASDAQ coming back so much after being down substantially earlier today. S&P futures surging 6 points. Not a very active morning, I got to say, Tom, in the equity market.
We're going to make you cynical. We're going to destroy you, Lisa.
Oh, yeah, you're going to make me more cynical, huh? You're going to make me gloomier?
How could that be?
Well, no, look, there's a lot of earnings questions this week, and we're going to get incredible. All of the big tech earnings will come out, and perhaps it'll be a chaser to some of the hope that's been priced in.
Jim Suva reaffirms on Apple this morning, I believe, a 150. Maybe I'll even adjust that up from here. Coming up on Balance of Power, Nicholas Dungan, the Atlantic Council, an important conversation on our international relations. Futures up 2, Dow futures up 51. Stay with us through the morning on Bloomberg Radio and Bloomberg Television.